how to find high probability intraday trading opportunities. Again, my name is Don Kaufman, and you are watching a TheoTrade presentation. Risk disclosure, we're not financial advisors or a broker-dealer. I always throw this up here because I spent just over 15 years in the brokerage side of the business. I'm out of the brokerage side of the business. I'm out of the contest. With that copyright disclaimer, you know what? I want you guys to know on this slide that we are based, again, in Scottsdale, Arizona. And one of the things I always try to point out to people, listen, you can get a hold of me after tonight. Just shoot an email, support@theotrade.com. Put Don in the heading. People are always surprised. Yes, I will answer your email. We have thousands and thousands of emails that we receive a day. We answer. I mean, if it takes us 4 or 5 hours a day to answer, a few hundred emails each, we'll do it. Not a problem. But we use a common inbox. So if you ever need to get a hold of me, and that's important that you guys know that, because people like, you come here, you listen to this. I don't want you to think you're off on your own. Hit us with an email, support@theotrade.com. Again, it doesn't matter that we have an office anymore. Nobody's allowed to go to any offices. So we have an office in Scottsdale. We haven't been there in 3 months, but I hear it's wonderful. All right. This is why you're here. All right. By the end of the webcast, here's the thing. Anytime you come to a webcast, you want to spend an hour, hour and a half with us, and I hope everybody's all right. I'm probably going to run over because I actually packed tonight's presentation with a lot of really real-time examples. So I want you to be able to walk away always, anytime you're going to spend this amount of time with something definitive. That's the most important thing to me. So when I say something definitive, something tangible, something you can actually take to the marketplace and use literally tomorrow. So first thing on the docket tonight, how to generate high probability outcomes, intraday trading setups. And I'm going to say this again and again. Tonight, we are expressly going to be talking about intraday trading setups. That's for people that do want to place a few trades here and there. I'm going to tell you something right off the bat as well, okay? You're not going to be glued to the screen all day. Yes, that's number 4, but it ties in perfectly to the intraday trading over here. You're not going to have to be glued to the screen. We're actually going to use a couple of different set and forget style strategies, and you'll see exactly what I mean. Okay, how to select the right options for intraday trading. Yes, we are going to talk a little bit about options. Is that all right with everybody? Okay, it's 2020. If this was 20 years ago and I said the word options, everybody crawls under their desk. But options are totally mainstream now. So I said the O word. And even if you've never traded options before, it's fine. We're going to talk a little bit about some of the basics. If you don't love options, there are going to be other methodologies to use what I'm going to show you. So you can we can talk futures, we can talk stock, okay? But I think you're really going to like what I explain here in options. Number 3, you can actually be right less than 50% of the time and still receive consistent trading results. This one is probably the most critical step. When I say I want you to walk away with something definitive, I want you to think about this long and hard, people. Can you be right less than 50% of the time and have consistent results? Because that's precisely what we're going to show you here. In fact, in the next 10 minutes, we'll be into that. And number 5, how to circumnavigate day trading margin restrictions with various alternatives. I love this one because the day trading margin rule, which is, a lot of people know it as PDT regs. PDT regs are actually fairly easy to circumnavigate. You're like, how? I need to know. I'll talk about it towards the end of tonight's webcast, if that's all right with everybody. I did spend, again, 15 years in the brokerage business. I have been here long enough to figure out how to circumnavigate most of the regs. All right. For those of you tune in for the entire evening tonight and stay with me to the end of this webcast, we're actually going to give you what I think is an absolutely spectacular intraday indicator, and it's a $497 value easily. And I'm actually going to show it to you throughout the course of this evening. But the indicator we're providing to you is something I use every single day. It's a cumulative ticks and quad indicator. Cumulative ticks provide a running tabulation of the NYSE tick indicator and can provide leading edge insights towards shifts in the market direction. Yada, yada, yada. Listen, the bottom line, and I'm going to show you a screenshot of this in a second. Okay, stay with me right to the end of the webcast. I will provide a link. That link, okay, will give you download capability to this cumulative ticks indicator. Moreover, okay, tonight I'm actually throwing in there right here. This is actually comparative quantics. This is a beast, people, to develop, and it's something that I've used for many, many years. But you're looking at this and you're like, man, there's a lot going on that screen. Trust me, you want this. Everything from, here's actually tick. That's the NYSE tick. This is an advanced decline line. Over here is actually breadth. The candles are actually colored, specifically when 1, 2, 3, 4 aspects are in alignment. Okay, it has to be an uptick, okay, advanced decline line, uptick, actually positive ticks, and it'll actually color coordinate that. On the bottom over here, we have what we call quantics. What quantics does, quantify, right? Quantics, what it ultimately does, it keeps a running tabulation of the NYSE tick. If you're familiar with like NYSE tick, right? This is actually NYSE tick over here. And if it says like positive 1,000 tick, the next minute's positive 1,000 tick, this actually adds it up all day. Well, what we have down below, imagine if you could do that with four major indices, the Russell, the S&P, the NYSE, and the NASDAQ are all accumulated on here. Again, this is something we will provide to you this evening. And I'm also going to reiterate, we have never given anybody Quantix. Quantix is a hardcore indicator, again, that I use on a day-to-day basis. Again, I can explain it as we kind of go a little bit. I am going to use this throughout the course of the evening. All right, everybody ready? All right, a little bit of housekeeping in here. Housekeeping tonight. It's going to be a pretty in-depth skill set. Pay attention. Whatever you got to do. I say shut the door. You know, lock yourself in, people. Turn off Skype chat, whatever else is distracting you. I mean, I think a lot of us have been working at home. Some of us are retired, but a lot of us have been working at home for a considerable period of time. You've probably gotten pretty good at isolating yourself as of late. So I say close Facebook, phones on silent mode, kick out the kids. Hey, it's free time from the kids. Definitely is for me. I'm in my mid 40s. I have 3 little kids. So people are like, I do a presentation at night. Yeah, I get to get away with murder up here, 3 kids. I'm all by myself. It's wonderful. Grandkids, kick them out too. It's a good reason. Best thing about grandkids, you hand them back. The dog can stay. I'm all about the dog can stay. If it's quiet. Listen, the bottom line is you took the time to be here. This stuff's going to be really important tonight. Focus on being here, especially for those of you that are intraday traders, and I stress that again and again. Here's a little bit about me. So my background. I watched order flow for 15 years. I'll explain that in large part here momentarily, but that's a large part of why I'm here. When I say I watched order flow, most people have no clue what order flow is, but I'll give you some background on it here momentarily. So I actually grew up around traders. I came from a family that started a big trading firm in the 1970s. They had owned over 500 seats on exchanges around the world, and they sold the trading firm. And again, it was my uncle's family, but you grow up around it. You got an interest. You have an uncle that's a billionaire, and obviously he's going to draw some interest, and that's exactly what it did. So at the ripe old age of 22, I went to Chicago. I traded in Chicago for a few years, and then I was invited to a startup. Nobody knew what this startup was going to be, and the startup was actually called Thinkorswim. And I built the education division of Thinkorswim. I was at Thinkorswim from, I think I was number 13. I was like lucky number 13 in terms of an employee at Thinkorswim. Again, I built their education division. I then went on to, I was on the executive team that took them public in 2007. I was there for the TD Ameritrade acquisition. I went on to actually run education for TD Ameritrade from roughly 2010 to 2015. And at that time, and this is exactly what I was going to mention, is I watched order flow. And people have, again, no idea what order flow is. I watched everything that you did. You're a retail client. So am I. I think most of us are retail clients, right? By the way, these are not rhetorical questions. I read the chat room, people. Okay. When I say, we watched order flow, I mean, what does that really mean? All right. Okay. Yeah, by the way, yep, I was there for that too. In fact, I actually ran that company for a while. But when people say you like to watch order flow, one of the most important things, just to give you a large picture here, okay? I'm the guy that runs education at the time for 7 million clients. If you're running the education division of 7 million clients, what's the most important thing? The success of the clients. Okay? No, but that's all that matters. The success of the clients, because a successful client continues to trade. And that's what the brokerage firm wants. I mean, hey, listen, brokerage firms want you to trade, right? So the more successful you are, the more successful the brokerage firm is. So what we did is we used big data. Big data, we went in there and mined everything that people did in terms of trades. And I mean everything. Okay, we studied trades. We know what works, what doesn't. You name a strategy and options and stock and futures, we know what you did. I watched the order flow and studied it. Okay, in the last 5 years of my career at TD Ameritrade, I mean, it's a science there. They had an entire division of individuals. In fact, we called that division the nerdery. They were like actuaries and just quantitative geeks sat in a room. And what you're going to learn here tonight literally comes from watching billions and other mistakes. And I put a lot of weight into this, and I'll tell you why I put so much weight into it. Because a lot of people turn around and go, I was a market maker, I was this, I was that. I made markets. That has nothing to do with what works for you. Okay. And that's why I put so much weight into this, because there's only probably 4 or 5 people literally in the world that had this kind of access. And there's not too many people talking specifically about that. So anyway, that's a little bit about my background and where I kind of came from over the last, it's been I started trading in 98. So it's literally been 22 years since out of the business. So this is actually I do some TV appearances. I actually did one today. This is the last time, though, that I was in studio. This is actually TD Ameritrade TV. I actually did a slot on TD Ameritrade TV today. Anybody see it? It wasn't that exciting. All right, we talked about some of the home builder stocks. I've also done a couple of CNBC tours over the years. This is, again, the most memorable because it's myself versus, Kevin O'Leary. By the way, he's actually a great guy. I know I'm ruining that for everybody. You'll watch Shark Tank. You're like, they hate him. He's the meanest person. He's a very, very nice guy. All right, so enough of the introduction. Let's get down to business. Chaos. It's got a lot of people down. I get a lot of emails from clientele, and I said that a moment ago. I know we answer hundreds and hundreds of emails a day. Chaos shouldn't get you down, okay? A lot of people are looking at the marketplace like the market should go down. It's all wrong, and unemployment and this. Listen, this is the time, people. Volatility, whatever you might think about the market, volatility, it's the opportunity. It's your opportunity. And I want to show you to begin with tonight what's possible in a more extreme marketplace. What I'm actually showing you here, and this is the first introduction to it. I am going to show you trades. I'm going to show you account statements. I'll show you everything. This is the kind of stuff that I could not do when I worked as a registered representative, meaning that when I was in the brokerage business, you can't show your accounts. You can't show statements. Well, here's my statement. First and foremost, this is an IRA. Next, these screenshots, anybody know what trading application they come from? Okay, you'll never guess what trading application. What did I work on for roughly, 15 years? The trading application, okay, is TOS. It's think or swim. And what you're looking at is a 5-day net lick value, 5-day net lick value, 5-day net lick. Net liquidating value means it's the total value of your account. You're seeing, okay, just 3 really slices of pie. So here's one. Starting back in February. This is February 23rd. This is the week of February 23rd. And of course, it goes backwards. It goes like, B4, B3, B2, B1 today. That makes sense to a lot of traders, but if you're new to seeing this, this is actually a great run that we had 1 week. I say me. So I started with $211,000. I ended the week at $248,000. Then I took another slice. That next slice in time was all the way, precisely a month later. A month later, I took a $305,000 account. By the way, these are the same accounts. This is, again, my IRA. The account went from $211,000 to about $305,000 inside of a period of a month. By the end of this week, this was not a spectacular week. Nevertheless, by the end of the week, it was worth $308, just showing the reality of trade. Fast forward fast forward a little bit of time over here. This is now the, it's this month. It's June 8th to June 12th. The account went to $396,000. By the end of the week, it was about $400,000 and change. So that is, again, 3 different slices in time that I wanted to provide you and an insight into my retirement account, which I trade in extensively in my retirement account. And if you're curious what kind of trades, I'll just give you a glimpse of some of the trades. By the way, I want to give you a glimpse of the trades that are in this particular time frame. So like here's the week, of what, February 23rd, right? So here's a trade that I opened January 17th and closed February 27th. And this is an option spread. It's called a VIX volatility spread. And this VIX volatility spread, I want to make something completely clear. I had absolutely no idea of anything in this time frame, and I closed it at the onset of the entire COVID crisis. Put it on for what's called a 0 credit, okay? Took it off for a $3.75 credit. Now, for those of you that don't trade options, 1 contract would be the equivalency of $375, okay? But if I were to go out there and I were to leverage this, I could do 10 contracts, put another 0 on it. I could do 100 contracts, put another 0 on it. You can see, again, the exact date and time, the execution date and time. I'm just trying to get you comfortable with what the trade looks like that I've copied and pasted from Thinkorswim. So just backing you into it. The next trade I'm showing you, this one, I will tell you, this is one of the absolute grand slams that I've ever had. So did I throw it into the PowerPoint presentation? Yes. Okay. Because it's one of the absolute grand slams that I've ever had. And this is an XLU. That's actually the utilities. And this is a risk twist spread. This one, again, when I put it on, I didn't know I just didn't know. I mean, you heard about it a little bit back in February. The trade was closed March 12th. So the trade was on for a period of about a month. Now, granted, we're going to talk about intraday trading, but I wanted you to see a little bit of the full Monty tonight. This is a trade I put on for a 96-cent debit and closed it for $12.72. All right. So it's every $96 that I invested, I got back $1,272. It's a 1,225% return. That also could be, of course, 960, returning $12,720. Because again, I wanted to show you a few of the trades that I had on that went on that run to push my account value. So that's an XLU risk twist. Now, I'm done with the past. Let's come to the present. This is actually a TLT volatility back spread. Man, this is where it's been lately. These back spreads, volatility back spreads, have been phenomenal inside of this business. I wanted to throw this month in here, right? So here's June 5th, closing June 11th. I put it on for a 25-cent credit, closed it for a $2.10 credit. This is TLT, people. This is bonds. It couldn't be a more docile instrument, but those kind of returns are still, okay, immeasurably important in a marketplace that, is volatile. It's why it's called a volatility back spread. And here's a little bit what our members are saying. I just wanted to see Sandra filled this at $1.97. YRB filled this at $2.01. Rocco just crushed it. This guy is just absolutely crushing it with these types of volatility back spreads. Nevertheless, these trades that I am actually showing you, okay, I filled at 210. Again, Sandra filled at $1.97. YRB filled at 201. These trades are actually done in front of our clientele. And again, to bring you even more recently, I only think it's fair to show you fairly recent trades. Is that one recent enough for you? This is a Microsoft. As I said, I've been hitting it hard in these back spreads. This is a Microsoft volatility back spread. This one's actually put on June 3rd. That date might look familiar because it's today. And I closed a portion of it today. So this was actually put on for a credit, a 76-cent credit, and it was closed for a $5.40 credit. So again, that's an absolute grand slam in terms of a trade. Again, I wanted to put on, something recent, and I wanted to show you something recent. And again, this is John Nolan. I sold my Microsoft back ratio. It's back ratio spread, volatility spread. John Nolan actually got 550 for it. Just to show you, I got 540. He got 550. Omar here filled at 587. And Jerg put on 4, wiggled out of 2 in the $200 to $300 range, worked like a charm. So again, we take things off at various times, but this is literally from today. So with that, I wanted to show you again what's possible in terms of volatility. Let's get down to business. Listen, we're going through a difficult time. And people don't feel it though, because you're inside of the marketplace, right? You're in the marketplace and the market's done nothing but go up. Mark my words, okay? Chaos is a coming, okay? But volatility is good. Never forget, okay, that I'm saying chaos is coming. In this marketplace, chaos is coming. But you have to look at this as opportunistic, and that volatility is good. Because I'm going to tell you very forthright, the kind of volatility that we've had already. Let's forget the fact that we're about to move into probably even more volatile times. The kind of volatility we've had already. We're already, to me, past where we were in 2008 and 2009. You know, there's a lot of times in my career that I've said what happened in 2008 and 2009. I've said this in the past. I've said it's a once in a lifetime opportunity. This is better. This is absolutely better. And it's just setting us up and setting us up and setting us up. It's trade after trade. You know, the results that you're seeing inside of my IRA, okay, this is only going to get better. The volatility is going to kick back into high gear, and volatility, people, is good. By the way, speaking of volatility is good, I'll show you something interesting before I jump head on into really teaching you guys about specific trades. Look at the number of trades. They're exploding. If you don't believe volatility is good, this is actually TD Ameritrade. This is TD Ameritrade Holding Corp. And I wanted to show you this because to me, it just means an incredible amount. What I am looking at over here, and I'll just be very specific, down below, right there, that number, that's the average trades done per day. By the way, this is in thousands. So if you take a look, when I say that volatility is a good thing, it's often, you know, misinterpreted. But if you look at like September of 2019, I mean, September of 2019, not a lot of volume. They were doing approximately, and I want to make this clear, that means 810,000 trades a day. So 800,000 trades a day. October, by the way, October, what happened in October, November? What happened here in October and November, right? I can tell you exactly what happened. We went to what? They went to actually free commissions. So when they went to free commissions, you can actually see the jump in trades as soon as they went to free commissions. But the jump was only about 300,000 trades a day. Okay, there it is, December, January. Here we go. We're actually going into the COVID crisis. They went in January from doing 1.5 million trades a day. They're now at 3.3 million trades a day. You don't think this is the greatest opportunity? Then why is the entire retail world? They are lighting it up, people. It's incredible. If you ask me, like, would anybody ever be able to do 3 million trades a day? Even 5 years ago, I'd tell you, you're out of your mind. Again, I worked there. 3 million trades a day is unheard of. They've had days where they've done 4.5 million trades. 4.5, not contracts, not 4.5 million individual trades in one day. Shocking. Listen, it's your opportunity. Volatility is your time to shine. It's your turn. Now, let's jump forward, okay? We're going to jump into and start this off tonight with TheoTrade principles. Now, this is actually a slide. If you've attended any presentations before, and I'm kind of curious, how many of you here are brand new? By the way, these are not rhetorical questions. Even if you're watching this on a recording, you should be screaming at your iPad, your phone, or your computer, okay? If you've, so how many people have actually been here before? You've actually attended, okay, a TheoTrade presentation? Anybody? All right, this is where you go, I have. If you have, maybe you've actually seen what we talk about here with TheoTrade principles. In every strategy, okay, in every way, shape, or form, we will employ the use of trade logic, allocation, directional bias. It's principles that guide us in the marketplace. And you're like, oh, okay, what does that mean? Okay. When people look at this, they don't get it. They don't get it. Like intraday trading setups. If you want to learn intraday trading, you got to have a trade logic first. And when I say that, what's your trade logic? What is your trade logic? Okay. I want to know. When I ask that question, it just, people draw a blank. They go, well, my logic is I find something that goes up. And I go, whoa, time out there, cowboy. Did you just say you find something that goes up? Okay. Because right there, you're on number 3. That's my directional bias. Okay. I asked what your trade logic was. Where is your trade logic? Because that's what we're going to hammer home first. Don't get me wrong. Directional bias, that crap is important. Because if you know what's about to happen, you're going to be better off. But I cannot stress enough, if you don't have good logic, if you don't have risk management, you're already dead. You just don't know it, especially in volatility. And I think a lot of people, they have come to this conclusion. They don't really get, like, what does that mean to have trade logic? It's critical for us to distinguish. Effective trade performance is based on these 3 factors. Logic, allocation, bias. Logic, allocation, bias. Obey the rules, right? So let's get into it. What is trade logic? It means how you approach trades is vastly more important than being right or wrong in the markets. Okay. And I'll point this out. I mean, listen, you go out there and you buy a stock, okay, or you buy an option, you are right directionally, but you still lost money in the trade. How many people have had that happen before? Okay. I mean, when I say that is you go out there and you bought the right stock, your timing was perfect, yada, yada, yada. You had your MACD, your Fibonacci, you even had your Bollinger Band. Don't you even get me started on Elliott Wave. Okay. But you still lost money. So what went wrong? Okay. Maybe the stock whipsawed you. I mean, by the way, I put this in here earlier today because I think it's just amusing. Recall, stop is a 4-letter word. That basically means you got stopped out. You got stopped out. You were the bottom tick of the day and the market just ripped the other way. Nobody ever wants to admit this stuff. Okay. Listen, if you've never had this happen, you just haven't traded before. I mean, when I say right directionally and still lost money, come on. Listen, I'm the only one, well, me and about 6 other people here that work at TheoTrade. I'm the only one and 6 of our friends that are actually reading this chat. Come on, you got to use this as admitting it, huh? Okay, admission of guilt, and you should, because I'll tell you what, that ain't trade logic. When I say that's not trade logic, most people don't have trade logic. So let's actually bring that up. Tonight's trade logic. First step, define your trading strategy, break down the logic. Okay. When I say define your trading strategy and break down the logic, now we're getting somewhere. You got to ask yourself with what you're doing. Okay. With what you're doing. I've been hearing these stories, reading stories of people that go out there and they just buy, like, what's your trade logic? We'll go, I buy a boatload of calls on Hertz and I hope that the stock goes up. And I'm like, oh yeah. Okay, time out. Ask yourself in every single thing you're going to do. Everything you're going to do. And you have to ask yourself this question and answer. If I were to do this 100 times, what's the outcome? Like if you do the exact same thing 100 times over, are you just getting away with like murder right now in the markets because the markets are allowing you to get away with murder? Or you actually got something? Okay. Many directionally challenged traders can still perform, okay, if given the correct trading logic. By the way, directionally challenged trader. Apparently that's my thing, but I love this, directionally challenged. I picked up this sign, but I think this had to do with somebody that couldn't follow like a map or drive. Anyway, I prefer to call people directionally challenged traders. That's somebody that couldn't find the keys if they were in their hand. You couldn't find the front door in your own house because you're so cold. That's what a directionally challenged trader kind of means to me. What I'm actually kind of getting at in here is, once again, you don't necessarily have to be right to be able to make money. All right. Intraday options and trade logic. In order to create a viable intraday trading strategy, we shall employ the use of options. As I said, we're going to talk a little bit about options here. Ease up, because I'm going to give you some examples. I recognize that some people have just no knowledge of options. That's okay. Others do have great knowledge. I'm going to show you some interesting things. Even if you're extremely experienced, you will still, I think get your bearings a little bit in terms of what we're going to do with options. Additionally, this evening, we are using a defined risk option strategy, as the trade will not have to be monitored the entire trading day. So some important concepts that I'm hitting over here. I don't want you to think that intraday means sitting there monitoring it all day. Translation, you don't have to be glued to the screen. If you have absolutely no options experience, don't panic, no cause for concern. I'm going to take you through a very basic example tonight. I also want to reiterate this. I don't care if you're an absolute novice or an extreme trader. Both of you guys are going to pick up something this evening. Listen, I'm going to try to hit on a lot of different levels. If you're brand new tonight, pick up big, broad strokes of logic. If you're experienced, look at the finite details of what I'm doing, and you're going to see just that. So why do you want to use options? I think that's a viable question. Why do you want to use options? First of all, minimal capital exposure. Trade with as little as, it's a couple of bucks at risk. You literally can do trades now for $60, $50, right? I mean, you can have really, really limited capital exposure. Number two, they offer weekly options expiration. Several products now offer 3 expirations per week, right? Like they actually have now Monday, Wednesday, Friday expirations. A lot of people don't know that, but there's an expiration tomorrow. There's an expiration on Monday. There's an expiration on Friday. Every day, it's happy days are here again. We're going to offer viable risk reward when used properly. That's precisely what I'm going to show you. There's no need for stop orders. I don't need no stinking stop order. Can be traded in your retirement accounts. Avoids, the mass risk and sheer magnitude and fear produced by futures contracts. By the way, I am not, I'm not anti-futures contracts. I'm fine with futures contracts. But when people are new, a futures contract is, how do I say this without coming off wrong? When you're brand new to this business, a futures contract is a chocolate-covered hand grenade. You're like, let me think about that for a second. Yeah, that doesn't sit well with me. All right, so by the way, they have now micro futures contracts to make it a little bit easier, but the skills that I'm actually talking about tonight can absolutely, unequivocally apply to futures contracts. Number 7, trades, again, need not be continually monitored throughout the course of the day, and a trader can produce returns far beyond the max risk in any given position. So let's get down to it. Let's show you guys a little bit about options, some of the basics of options, and then we're going to jump into the a little bit of the extreme over here. Ready? Okay. So the first thing, option basics explained. So we're going to make this very, very simple this evening for time's sake. We're going to go out and we're going to look at any given stock. There's a lot of stocks now that seem to be trading at 200. And if you guys have ever tuned into a presentation, I don't call a stock a stock. That's just wrong. I call it stock. Okay. Every stock in my example is stock, but it's stock. So stock now is trading at 200. So you want to go out and you want to create a trade on an intraday level. When I say intraday level, like that's it. You're in, you're out, you're on with your life today. And I just can't stress that enough because, all right, here's another, admitting it's the first step. I'm getting off track, but I think it's okay. How many of you guys have ever done an intraday trade? Intraday. You know what intraday means? It means I'm in, I'm out, I'm on with my life. Okay. But how many people have ever held the intraday trade overnight and then the intraday trade turned into a long-term investment and now it's what we call a piece of crap sitting in your portfolio that never should have been there in the first place? Huh? How many people have ever done that? Just curious. By the way, this is where I pause and I wait for everybody to answer. Okay? Yeah. No, everybody has like at least one, long or short. Okay? You're all looking at your portfolios right now. You're like, yes, Yes, it is. It's called Hertz. All right. It's just you love the pain. Okay. Holding positions overnight that should have been intraday trades. Anyway, we're not going to do that because I'm going to tell you right now, intraday to me means intraday. No matter what, when the bell goes off, I'm out. I'm out of the contest. You got to get out. All right. So we're going to go out and we're going to talk specifically about options. So this stock is trading at 200. I do not want to invest in the stock. I'm just going to use, okay, what we call a 200 call. Just a 200 call. Now, I'm not going to go wildly in depth, okay, about everything you need to know about a 200 call. But the point that I want to make with the 200 calls, the 200 call is going to cost you something. It's a premium. And the premium, okay, let's assume that this $200 stock, this is a volatile underlying. This 200 call is actually going to cost you as much, okay, as $4. So you're going to pay $4 for it. So you buy the 200 call. 200 call gives you the right to buy the stock at what price? All right. If you have a 200 call and the stock is trading at 200, okay, and you paid $4 for it, 200 call gives you the right to buy the stock at 200. Now, do I want to buy the stock at 200? Absolutely unequivocally no. I want nothing to do with buying the stock at 200. You're like, so why are you buying the call? I'll tell you why I buy the call. I buy the call so I can turn around and sell the call, hopefully for a profit. Now here's the whole question. Okay, the reason I want to introduce you to what a 200 call is. You're like, yes, I can buy the stock. We're not buying the stock. I don't want to buy the stock. I'm going to buy the call, okay, and I'm going to do it in the morning, and I'm probably going to sell it in the afternoon. That's it. All right, this is a 1 day, okay, trade. That's it. It's 1 day. You're in, out, same day. In, out, on with your life. So the whole question is, all right, is what is that call, that $4 call? Because again, it's costing you $4. What is the 200 call worth? Okay. Let's say that this stock can move down about $2. The stock can go to like 198 or the stock can go as high as, let's say, 202. That's in 1 day. Okay. What is the 200 call worth if the stock goes to 202? What's the 200 call worth if we go to 198? Now, this is not at expiration. This is it. This is just today. This is today. That is one of the things that I'm going to help you answer here momentarily. Okay. That's for an option basics example. What I want you to see, okay, is that all of a sudden you're riding this $200 stock, okay? And you could buy an option for $4. And what's the maximum risk? If you buy something for $4 and all of a sudden you're in the $200 stock, halt trading, the stock goes bankrupt, okay? You know, it goes absolutely bankrupt. What did you lose? You're like, $4. Now listen, you're not thrilled about that, but it is what it is. You lost $4. What I'm getting at is, does this define your risk? Absolutely, unequivocally, yes. Now, why am I doing this trade? Because first and foremost, the stock is right here at 200, right? Okay. What are the chances of it going up here or down here? I mean, what are the chances of a stock going up or down on any given day? Let's put those odds at 50-50. Now, right now, one of the most important things to understand, I have no directional bias. Now, I bought a call. Buying a call is bullish, but I'm assuming that you are a directionally challenged trader. And what a directionally challenged trader means, you're a 50-50. You might as well, you're so bad that you might as well flip a coin to decide whether you're bullish or bearish. Nobody ever gets there, huh? Okay. Anybody? Okay. By the way, don't worry about day trading margin rules because somebody already brought that up. Don't you worry about a thing, man. I got you covered. Right now, you're 50-50. Okay. Question is, can you make money in here? Can you actually make money being right 50% of the time? The stock can go to 198. The stock go to 202. We're going to answer that question. Okay. That is the basic example. All I want you to understand at this point in time, you can buy a 200 call. 200 call gives you the right to buy the stock at 200, right? You're paying $4 for it. So it limits your risk to $4. Then the stock is capable of going up or the stock is capable of going down, right? There's about a 50-50 shot of that happening on any given day. That's it. And we're going to be in and out on the exact same day. Everybody got some of the basics down? Because now we're actually going to go into live examples. Options logic example. In this example, you buy an option on an intraday basis, this means you bail out in every single case prior to the day's end. You're out of there, okay? The big question, obviously, which option do you buy? Risk versus reward is going to be of critical importance. Why? Why is that so important? Critically important. Use the wrong option, you're dead. You're dead before you even started. We okay so far? Because again, there's a lot of people on. It's kind of quiet. Again, these are not rhetorical questions, right? Everybody okay? Make sure. Good. Again, I'm reading the chat here in real time. Okay. So, okay to go. Okay to go with that. Now we're going to look at what we call 100 trades later. So you have to give yourself scenarios, okay, that are not just about, I looked at the MACD and the Fibonacci, and then some guy on a Reddit board said I should buy it, and then the guy on CNBC said the exact same thing, so I bought it and I made money. Listen, that's just not going to work long term. You know, in a marketplace like right this second, and with all due respect, the marketplace, right, from kind of late March has been straight up, right? April, May, June. You've had 3 months. 3 months. Everybody all of a sudden in the last 3 months, okay, they don't need any help. They're a genius. Everybody's a genius. I saw some guy on TV the other day picking letters out of a Scrabble bag and buying random stocks and making money. It all works until it doesn't. And that's of critical importance. If you don't have a skill set, okay, this business can be quite difficult. And I think that many of you that come here realize that. Okay. By the way, somebody had mentioned in the chat room here, they're like, it's an election year. All right. First of all, in election years, in the last several elections, those have been some of the worst market years ever. Need I mention, 2000 election? Okay. I mean, I can go on. Obviously, 08, was a major election. That was one of the worst years historically ever. And it just goes on from there. Election years have actually not recently been good years inside of the marketplace. I'm just going to throw that one out there for your consumption. There's always one in a crowd, but I actually appreciate that. So the thing I want to show you, okay, in this scenario, you have to create a trade setup where you can be right 50% of the time and still have a degree of profitability. Let me show you why. Because you're not always going to be correct with your directional bias. Hey, listen, I have to tell you, here at TheoTrade, we're realists of the marketplace. Okay, I'm not gonna sit here and tell you that I'm right 70-80% of the time, because that stuff is pure crap. It just is. Nobody's right that often. Okay, listen, the buck stops here. I worked at the biggest brokerage firm and I saw everybody's trades. So I'm never going to tell you, I'm right 70% of the time. Nobody is. Okay, nobody is. I've seen a lot of people break the 50% barrier. Okay, but the bottom line is, if you could do 100 trades and be right 50% of the time and still come out ahead, does that interest you? Okay, I mean, literally, you're right 50% of the time. I don't care if you're using a coin to decide heads I'm bullish, tails I'm bearish. Okay, and we come out and we're like, okay, this trade. Let me actually show you some very straightforward trade logic. Because that's what this is about. It's called 100 Trades Later. It's trade logic. It's something that they teach in every major trading firm. They teach this, right? This is an XLF example. Okay, XLF. It doesn't matter if you understand the XLF. The XLF is the financials. I wanted to start easy on you. Okay, I wanted to start very easy. I actually took this screenshot yesterday, and I'm going to walk you through this. By the way, don't panic. Everybody's like panicked the first time they see this screen. This is the Thinkorswim. It's actually, its acronym is TOS. This is the Thinkorswim trading application. You need not be on the Thinkorswim trading application, but I just want to make you aware that this is Thinkorswim. The last price in this trade here was $23.79, okay, which is not far off where XLF is today. This is an intraday setup. Now, the first setup that I'm giving you, okay, I selected an option that was trading for precisely $1. And the reason that I did that is just to make the math easier for you. I selected an option. Now, the option that we're looking at is what we term the 23 call. Let's all sit here and imagine that we purchase now the 23 call. What's the 23 call give you the right to do? Gives you the right to buy the stock at 23. Do I want to buy the stock at 23? No. What do I want to do? I want to make money and get on with my life. Okay? So you can go out and you can purchase the 23 call. And that 23 call right this second, okay, would cost you $1. And you go, why would I want to pay $1 for that? Okay? Because it gives us the right to buy the stock at 23. But you're going to be in and what? Out. In and out. When are you going to be in and out? The exact same day. You're going to be in this trade, you're going to be out of this trade, and you're going to be in and out in the exact same day. Are we comfortable so far? Again, right? So we're going to purchase the 23 call. What is the call option estimated to be worth if the underlying moves up or down 50 cents? I'm not telling you that this is going to be a wildly volatile product. But look, yesterday when I took the screenshot, the stock had already moved 33 cents. This thing can easily move, okay? Let's call it 50 cents higher, okay? Or 50 cents lower. Now, I'm telling you, again, for those of you that are experienced, watch very, very carefully. This is a strike price shift. This is actually how they teach traders, okay, that are under stress to price options. What's under stress? When you were standing down on the floor in the late 90s, this is actually how you price options. What's this option going to be worth if we move 50 cents? You know, people are like, well, the delta's 74, blah, blah, blah. Forget that. We don't need that. We don't need no stinking delta. All I'm going to do is this. You know what this option's worth? A 23 call is worth, okay, if the stock were to rally 50 cents, it's going to be worth $1.44. And if we sell off by 50 cents, it's going to be worth 66 cents. Done. Okay, if you're in and out of this in the exact same day, there isn't too much time decay. There isn't any volatility exposure. Okay, this is not going to be huge. This is the best way to estimate what an option is worth. And you go, wait, I don't get it. What I'm telling you is if the stock moves 50 cents, the 23 call is going to act just like the 22.50 call because it's 50 cents difference. And if the stock sells off by 50 cents, the 23 call is going to act like the 23.50 call. So I want you to look at what this option is actually worth. Now, this is where, you know, I could bring out like a trusted calculator over here. I don't think we're going to need a calculator for this one, but I want you guys to see where I'm coming up with these numbers. If we're right, like, listen, this is a 50-50 trade, right? A pure 50-50 trade. If we're right, okay, what are we going to make? If we're right, what do we make? Well, our dollar option can be worth $1.44. So if I'm right, okay, and I'm just going to use ask, I'm going to estimate that I can make 44 cents. But if I'm dead wrong and the stock actually sells off by 50 cents, my dollar is going to be worth 66 cents. So how much am I going to lose? How much am I going to lose? Okay, I'm going to lose 34 cents. Stop right there. Is this making sense to people? Okay, and I'm going to blanket, and I'm actually going to show you again just to make sure that it's kind of sinking in, because the first time that people see this, they don't understand. Okay, they don't understand, first of all, how people, trade actively and do this time and again. All you do, if for a 50 cent move, and again, it's a 50 cent move up, okay, or a 50 cent move down, the option's going to be worth either $1.44 or the option's going to be worth 66 cents. So if I'm right, I'm roughly going to make 44 cents. And if I'm dead wrong in here, I'm going to lose what? Okay, 34 cents. Now, the bottom line of this, let's say there's a 50-50 bet. Okay, we're going to talk about directional bias here in a minute, but I want you to see how the trade logic itself is actually set up. By selecting the right option, it already put me, okay, in a substantial and advantage position. Advantage? Done. Now, could the marketplace crash and could I theoretically lose a full dollar? Actually, no. Even in a crash situation, you're not going to lose the full dollar because you're still getting out the same day. And in this case, there's 4 days left. That dollar could slip down, could be worth 20 cents. But the opposite is also true. If we rallied huge, okay, that dollar could be worth as much as, let's say, $2.34. Think about that. Now you're risking $1 to be able to make like $1.34 with equivalent size moves. Does this make sense? Now, the way I'm going to show you not just one example. We're going to do this a couple of times. This is important to me because what people don't get about trade logic is, does your trade logic fit this model? Does your trade logic say, hey, flip a coin, heads on bullish, tails on bearish, and by the way, if I'm right half the time, and I'm not telling you that there's monstrous edge in here, am I? I'm not sitting here going like, yeah, you're going to make $1 million. Listen, you're making 44 cents or you're losing 34 cents. That's with a 50-cent move in either direction, period. Okay, and I'm going to tell you, you do this enough times, that's going to come out well. And those of you are like, there's a little bit of decay, you got to pay commissions. Okay, so you know what? You still have edge. You still have edge. And that's why I constantly harp on people that trade options. They go, oh man, I got beaten up trading options. It's simply because you don't know which option to trade. Let's go on to the next example. That's the XLF. This is Twitter. Twitter. Okay, Twitter. The reason I actually selected Twitter for the next example, Twitter is a $33 product. And again, I'm starting this off really, really small. And the reason I'm starting this off small is because I wanted to find options that were worth right around $1 for examples that would work. And the reason I like to find options that are worth right around $1 is it makes this example a whole heck of a lot easier for me to explain to you. So this option's trading right around $1. But the reason I selected Twitter is Twitter, this thing can rock, man. This thing can move. Twitter can easily move up $1 or down $1 in a day. Am I right? So Twitter can move. So let's say that Twitter can move up or down $1 in a day. So here you have, okay, a $1 option. Now, how often are you going to be right in the marketplace? Huh? How often are you going to be right in the marketplace? I'm going to be right 50-50. Now, I know there's always one in the crowd. They're like, no, man, I'm going to be right 70% of the time. If you could be right 70% of the time, you're absolutely going to knock it out of the park. But I'm actually going to show you which options to trade. In this case, here's your dollar. Now, what is the 33 call? This is the 33 call. 33 call gives you the right to buy the stock at 33. What's it worth if we move up or down $1? Up or down $1 means the 33 call is going to act like a 32 call. Oh, or it's going to act like a 34 call. Does that make sense? This is actually what they teach market makers, is what they call a strike price shift increment. That's why market makers are 1,000 times faster than most people. They're like, well, the delta of the option states. I'm picking on you guys. The delta of the option. Forget about delta. Delta, delta, delta. You don't need no stinking delta. All you got to do is look at the screen. You want to know what it's worth? Listen, here your dollar can be worth $1.70. So if you're right, okay, you're going to make approximately 70 cents. And if you're dead wrong, your dollar, let's say it's going to be worth 50 cents. Okay, your dollar is going to be worth 50 cents. So if you're wrong, you're going to lose 50 cents. That's it. Do you guys see where I'm going with this? That's in a 50-50 shot. Hey, we move up $1 or down $1. Now, you could have trades that are going to be in between this. And I'm actually going to show you my live examples because, hey, sometimes the stock doesn't move at all. What's going to happen? All right. And I'm actually going to show you a little bit of drift in here in a moment. But I want to show you, does that provide you some type of definitive edge? Because I told you right at the onset, 50-50, 50-50, okay? But you can actually gain edge by, it's all about the selection of the option. It's all about the selection of the option. We okay? All right? By the way, somebody said, I'm going to buy a straddle. Don't dare buy a straddle. You're going to get killed. You're absolutely going to get killed buying a straddle. Unfortunately, this business, it ain't that easy. It's just not, right? You'll do better off buying one side or the other and being right half the time than buying a straddle, because the straddles are going to expose you to volatility risk. The next example. So I wanted to show you an example to begin with on XLF. Why? Because it's a $23 product. It's soft. It's gentle, right? You could have $100 at risk, $100 at risk. Everybody in here can do this trade. Every single one of you can put on that trade. The next trade is in Twitter. Again, it's $100 at risk. Every single one of you can do that trade, right? Next example, okay? This is the spiders, okay? Now the spiders is a $300 behemoth. But here's the cool thing about the spiders. I took the screenshot yesterday. You know why I took the screenshot yesterday? Because the spiders have a Monday expiration. And that is a Monday expiration. And here's an option that you can buy for a whopping 39 cents. Now, I could buy this option for 39 cents. And people, this thing can move. All right? This is a product that can move. And people, they don't get it. They don't get that once they listed options on a Monday, on a Wednesday, and on a Friday, it's utopia. Okay? Why is it utopia? may I ask, can the spiders move $1 in a day? By the way, when I took the screenshot, they're already up $2. The spiders can move $1 right now in a few minutes. In fact, they did today. At today's close, the spiders went straight down. Okay, the spiders tanked at today's close. They moved $1 in a few minutes. But this is a $300 product, $310. Can it move up a buck, down a buck? Yeah, but here's the cool thing. You have 39 cents at risk. 39 cents at risk. And it's a 311 call. 311 call gives you the right to buy stock at 311. What's the most you can lose? Okay, when you have 39 cents at risk. I'm going to tell you right now, if you're wrong, you don't even have to look down here. If you're wrong, this option's going to zero, baby. Zero. You're like, I'm a loser. You've been there before. Or the option could easily be worth $1.75. Right? Is that enough profit for you? I mean, we're talking about 200% and 300% returns with what? Okay, the option could be worth 96 cents. Even 96 cents, you're like, that ain't bad. That's with $1 move. $1 move is going to get you what? Your 39 cents is going to turn into 96 cents. There's edge in that. Right there, there's edge in that. And again, if you're not comfortable with this and go through some of the calculations in here, okay? By the way, I'll bring up the trusty calculator. Look, okay? Your option that you paid 39 cents for can be worth 96 cents. 96 cents minus, obviously, the 39 cents that you invested. You're collecting what? 57 cents out of that one. So I want you to think purely, again, about the 50-50 bet. Think about this idea of this 50-50 bet. Okay, you're able to make as much as 57 cents with 39 cents at risk. Next question I have for you, why isn't everybody scalping these? Okay, and they should be. They should be, but you have to know precisely the option to buy. You have to know how to actually place the orders. There's a lot more to it. Okay, what I want you guys to understand, okay, is the trade logic implications. In constructing an intraday trade, your option selection, it's imperative. In the previous examples, you could be right directionally less than 50% of the time, and you could still actually come out ahead. Can your strategy do that? And again, that's not a rhetorical question in any way, shape, or form. Can your strategy do that? And I'm actually showing you, and I want you guys to understand, I'm showing you, okay, in the most, I guess, straightforward scenario, I'm talking about $1 move. The spiders, they could rally right at the close, huge. You paid 39 cents. The option could be worth 268. You can't lose more than 39 cents, and an option could be worth almost $3. Okay? You got to swing for the fences with this stuff. Can your strategy do that? Most people don't realize that. You got to think about the implications of selecting a strategy. This is what trade logic is about. Again, think about the implications of selecting a strategy that can provide a degree of edge, definitive edge, in the markets before we've even discussed direction of the markets. Now, as I started off tonight, I was talking about, different areas of trade logic. And one of the things that I was discussing very heavily, okay, is I was talking about what? Logic, okay? Then we were talking about allocation. And then, of course, bias, right? Logic, you get it. It's 50-50 shot, but I'm coming out ahead. Allocation is heavily covered in here because I'm defining my risk. Now we're going to get to bias. Are we comfortable so far? Okay. Are we comfortable with this? Because again, I like to bring this to your attention. And so few people understand, even the most experienced traders understand, hey, the market rallies, it's worth what? $1 more or $1 less, right? And when the market rallies, a 311 call, right? What's a 311 call worth when the market rallies $1? And the answer is, well, it's worth what an option $1 deep in the money is worth. $1 deeper in the money. And in this particular case, well, if a 310 call is trading for 96 cents, that's what my 311 call is going to be looking like if we actually rally up a buck. And it's one of the easiest things that is so overlooked in this business, right? People are using theoretical pricing calculators. You need nothing, okay? The trade logic, the implications are huge, okay? Right directionally less than 50% of the time and still come out ahead. Now, directional bias, okay? Finally here, we're going to talk about directional bias. People go, that's what I'm here for, baby. Let's get to it. Let's show you a MACD. Let's show you Fibonacci. No, we're not going to use any of that. We don't need those stinking Fibonacci's. Okay, listen, I'm a quantitative trader, and some people are not familiar with the term quantitative trader. All right, so to explain a little bit, I am a quant. That makes me a trader math geek. Anything that I present has to have mathematical logic first and is going to be based on probabilities and is going to have further outcomes. When I say that is, okay, if you give me a strategy, and I don't care what your strategy is, but if you give me a strategy, okay, the first thing I will do with your strategy is try to break it down mathematically. I'll try to put it inside of some function, anything. By the way, you don't have to do that. You just don't have to do that. People are like, I don't know how to build, square root formula. Forget all that, okay? But that's me. So I showed you a little bit about the math logic. Now I'm actually going to show you about probability-based outcomes. Quants do not typically rely on charts. Now, I grew up a quantitative trader. I grew up around quantitative traders before the terminology quant was cool. Okay? So I don't rely on charts. I don't really use studies. I use probabilities, relationships. And I try to get statistical edge in the markets wherever I can. If you're not familiar with quant geeks, don't freak out. Don't worry about it. I'll be going over throughout the presentation of why and how quantitative analysis will probably become your new best friend. And I found this earlier today. Geek is the new sexy. Huh? Who am I kidding with that crap? I like it. Okay, geek is the new sexy. I don't mind calling myself I am a quant geek. That means I lock myself up in seclusion for long periods of time, looking at probabilities and analysis. It's not exactly the most exciting work and looking at some code, but hey, whatever gets the job done, right? Listen, the market, it speaks volumes. Trading for you, it's got to be about reading into market relationships, okay? I mean, one thing that I try to stress to people, reading market relationships, it can help construct a probability-based outcome, even on an intraday basis. I say, the marketplace, every time you took a glance at the marketplace, it speaks volumes, right? So when I talk about relationships and probability-based outcomes, don't freak out on me yet. What I'm talking about is this, okay? Most people approach the entire marketplace in a very myopic fashion, okay? And by the way, I am going to kind of poke a little bit at you right now. So I like that, okay? I'm sorry, one of the best comments ever came into the chat room over here. And I'm talking about a geek, and somebody said, look at Mnuchin's wife. Geeks are cool now, okay? Geeks are allowed to marry supermodels. I know it's a crazy world. I mean, look at Elon Musk, okay? He might be the real Iron Man, but if you saw pictures of him 10 years ago, he's still a complete geek. All right, easy. All right, back to topic. When people trade, they're myopic. They're completely myopic. And again, I am going to poke a little bit of fun at you over here. Most traders, they focus on one product, one stock, one futures contract or otherwise. But myopic traders, they're those focusing on one product, but they fail to see the larger probability, for instance, of an impending sell-off. Okay? Don't worry. It happens to everybody. There is a cure, all right? And when I talk about myopic, it's you're nearsighted. You can't see anything other than what you're looking at directly in front of you. That's the way I view like a myopic trader. And it's something, this took me a long time to figure out because, again, I grew up around quantitative analysis. So I've never been a myopic trader, but I've watched for years and years and years. I've watched retail clients trade like on the Thinkorswim platform. And this is what basically they do. So this is actually just a few days ago inside of Microsoft, and I thought this is a perfect example. So I used it. This is Microsoft a couple of days ago, and it was Microsoft. Here's Microsoft at the bell, right? It sells off a little bit. It rips. It is absolutely flying because everything in tech is flying, but you're not looking at everything in tech. You're only looking predominantly at what? at Microsoft. But that's fine. Maybe you are looking at a couple other tech stocks and everybody's buying tech and buying tech and buying tech. And the stock actually moved all the way from 194 to 196, like a $2 move in Microsoft in a day. Whatever, it's a $200 stock. Thing's rocking. It's rocking right up into the point it absolutely tanked. And people are like, well, but, the interesting thing about this, okay, is the marketplace was flashing so many warning signals. Nobody saw it, okay? It was a turn of events that sold off Microsoft. It had nothing to do with Microsoft. The entire market turned tail, and it was actually because the bonds started to rally. Because the bonds rally, it sold off Microsoft. You're like, what? Let me get you to that level. Let me get you to the level, because we want to get you away from being myopic. We want to get you into probability-based outcomes. Even trading on an intraday basis is based on probability. It's based on outcomes. When I say probability, all right, you can look at a marketplace. And what I want you to be able to get to is you can say, right now, based on market conditions, there's 70% chance we're actually going to trade to the upside. Or, for instance, I'm looking at the marketplace and be like 90% chance that we're going to be up in the next, for instance, hour of trade. Okay? Can you do that? Can you actually break things down into probabilities? That's exactly what I'm going to show you. I'm just going to give you a glimpse of it. Looking at select products, you can generate and create a higher probability outcome for intraday trades, right? So let's review just a few products, and it's going to allow you to create and again, generate intraday probability. So how do you do this? Now, don't freak out, okay? Because when I'm going to show you this, easy. People get like kind of scared of the next slide. Okay. Here is a quote list. Here, okay, is my intraday checklist. Now I'm going to explain to you how to build a probability-based outcome. Okay. You want to see a probability-based outcome? And again, this is one I didn't spend a huge amount of time on this, but this is actually a screenshot taken today. So it was taken today. So earlier today, the S&Ps, they were up 24. Okay. The NASDAQ was up 136. The NASDAQ's absolutely flying. Right. The Russell, incredibly weak. So by looking at this, this is incredibly positive. Okay. The NASDAQ is even more positive. The Russell is incredibly weak. So the Russell is actually weak. It matters. The next thing on here, the volatility futures, they're weak. So right now, okay, you've actually got two weak signals, two strong signals. And we go down the list. The bonds are down, but only mildly. The notes are actually only down like one tick. These are not necessarily positive things. The marketplace throughout the course of the day, just by looking at 1, 2, 3, 4, 5, 6 products. I've looked at 6 products, and I'm going to tell you right now, there is not a great probability of this marketplace sustaining gains today. Okay, as we actually look down the list over here, the financials, okay, the financials, where are they? Pretty much in dead line with the marketplace, but the fact that the bonds are relatively flat in the day is a warning shot. The big tech stocks are flying. That's the strongest thing in the entire day. Then we would look at things like advanced decline line. We would also incorporate what we call quantics. It'll give you an immediate probability-based model. You know what the interesting thing of today is? Okay. There's at best a 60% chance. In this picture, there's at best about a 60% chance that we're actually going to hold to the upside. As this day matured, it became a 60% chance of a sell-off into the close. So why do I mention that? Because I traded it today. All right, and I'll show you in a minute. There's about a 60% chance here in this screenshot that we're actually going to be up on the day. By, again, with about an hour to go to the close, there's about a 60% chance that we're actually going to sell off. Why? Because, again, that's what creating a probability-based outcome looks like. All we're doing is going through a checklist, and we check off. We're like, S&Ps, great. NASDAQ is ripping. The Russell, firing warning shots across the bow. And the Russell matters. You want to know why the Russell matters? Because there's tons of financials in the Russell. But as you look down the list of the usual suspects over here, you can go check. And just imagine for a second, if you had, for instance, and I'm just going to make this easy, there's 10 things that you look at. 10 things that you look at. 6 of those things are what? Okay. Incredibly bullish. None of them have weight over other ones. 6 of them are bullish. Boom. You got yourself a 60% chance of the marketplace. And we can get you better and better and better at actually creating probability-based outcomes on an intraday level. If you know the correct products to watch, what to look for, you can create a probability-based outcome Okay, it's incredibly viable intraday setup, and it's something that people are continuously missing. And that's why I love to go through this. And some people are like, I don't even know what a futures contract is. You don't have to use the futures contracts. Okay, you don't have to know what an S&P contract is. You don't. All right. Instead, would it be better if you used what? Somebody goes, I don't know what that is. Okay, you could use the spiders. The spiders are a great proxy. You could use the QQQ. It's the same thing. The spiders, the Qs, the financials. Okay, the TLT, which are the bonds. Again, there were warning shots being fired across the bow all day long today. One of the ones that really stands out on this screen, oh, those volatility futures. But the funny thing is, nobody even knows what a volatility future even is. And like, what would that be? Okay, we explained that. That's a lot of what we do here at TheoTrade. Listen, key factors, okay, to intraday success. You have to employ a viable trade logic, as displayed with the use of options. That's why I did that whole 50-50 example. Then you got to use a multitude of quantitative indicators. I don't like going out there. Listen, if you want to use MACDs and Fibonacci's and Bollinger Bands, stochastics, and an Elliott wave, you want to start chanting at the market. I don't care. Use it. Use it. But I really think you're going to enjoy some of the quant indicators that we provide, okay? Is the right trade logic coupled with our quantitative approach something that people have been looking for? I mean, I think that's fair. Okay. By the way, somebody was like, why financials and energy? Financials plus energy equal larger than tech. Financials plus the energy sector are actually larger than technology. Yeah, it's kind of an interesting one. Thank you for actually asking that one. I love it. Brad came in and said, which expiration? It's exactly what we're getting to. Again, but your intraday, it has to have these two variables got to be covered. You got to have trade logic. And then you have to have, to me, a probability intraday setup, a probability-based setup. The only way to approach on an intraday. Now, is every single example going to be spectacular? No. Let's actually give you, okay? I'm only going to give you tonight 4. That's right, 4 recent examples. Because I want to show you a good, a bad, and the ugly. I'm going to start with the ugly. The good, bad, the ugly, and somewhere in between. So I'm going to provide a couple of examples. These are trades, okay, that I've done. And I tried to be relatively recent. The other thing is I tried to do, with all due respect, I tried to do trades that were as straightforward as possible. I didn't want to throw any curveballs at you tonight. So I'm just talking about like SPY, Intel. I think I have an example on Facebook and maybe another one on spiders. Okay, so here's something that I did. And again, this was yesterday. I'm showing you a trade yesterday. Yesterday, I bought those 310 puts. I paid 62 cents for them. Okay, why did I buy the 310 puts? Because I wanted to. No, I bought the 310 puts. The setup was actually decent yesterday. Yesterday, there was actually a setup for a little bit of sell-off. Didn't happen. You want to know why? Okay. News came out. Market didn't tank. Oh, it went right back to the upside. So it went back up to the upside. So what happened? You know what my 60 cents turned into? 0. Can that happen? My option actually expired worthless. Okay. The reason I'm actually showing you this is no matter how many presentations I've been to, nobody ever shows you losing trades. Nobody ever wants to show you the losing trades. I do, because I'm going to tell you right now. Okay. Even with probability-based outcomes, you're not going to be, okay, infallible. Even with probability-based outcomes, what, you think I couldn't get? I got tweeted upon the other day. I got tweeted upon. By the way, tweeted upon, it's like it's become a verb, It's not Twitter, it's I got tweeted upon. It's just as bad as it sounds. So here, this was actually news that rocked the marketplace. The probability-based outcomes said that there was like a 70% chance we were going to go down. But we didn't go down. Market actually rallied, and I lost 62 cents. Is that okay? Right? Yeah, it's okay. Live to trade another day. I'm going to show you one a little while ago. Here's another one. This is actually one that I said the good, the bad, and the ugly. Right? This is actually one where I went out and traded Intel. Okay? This is a little ways ago. But again, the reason I'm showing you this trade is I put it on first thing in the morning. I closed it right at the close of the day. Here is a trade that was almost a complete wash. All right? I put one on for $1.83. I closed it for $2.05. Did I make money? Yeah, but not much. This is actually a little bit of a wash. Why am I showing you this trade? Okay, because again, you want to put the right foot forward. And you always want to put the right foot forward. Okay, but at the exact same time, putting the right foot forward doesn't necessarily mean that every single trade is going to go your direction. Remember, I like the premise. I like discussing 50-50. There's nothing wrong with that. So here we had this 50-50 bet and we ended up waffling in the middle. So I showed you one that was a loser, one that was kind of dead in the middle. Okay. Now I'm going to get to a more interesting trade. And I'm showing you a little spectrum here, right? So I showed you what? The spiders. I like the spiders. I do. Okay. Intel, right? Because I think anybody can trade Intel because max risk in here is $1.83. Now we actually look at Facebook. Okay, Facebook, also similar kind of time frame. This is actually in May. And the reason I used Facebook in here is I wanted a little variety, a little spice of life, a little variety in here. Here's a trade that I put on for $1.98 and closed $4.75. The cool thing is, though, in this trade, I didn't have $1.98 of risk. I did not have $1.98 of risk in this trade. Realistically, okay, I had $1 of risk because we still had plenty of time. So I really only had $1 at risk, and I pulled out $4.75. Now, the reason I wanted to show you this one because it's a decent outcome. You know, we're talking about being right half the time. And I just showed you, this is the third trade we're on. You know, the first trade was an absolute loser, right? I lost 62 cents. The next trade I made a little bit, but I only made, let's call it 10 cents after transaction costs. The next trade over here, all of a sudden, you know, I risk $1, I make $4.75. You're like, grand slam, home run. All right. So here, let's say we made, you know, $2.75. Okay. On the next trade that you do, you could still have a loser. Okay. And we can go back and forth like this constantly. Like, I just want you guys to see, if selecting the right option, the winners, you're going to take much more out of the marketplace. But it's all about the selection of the correct option, right? The right delta and so forth. Now, you know, I showed you, again, I wanted to give you a little bit of variability, right? As I said, I trade spiders a lot, and I didn't want to make every example the spiders. So there's the spiders, there's Intel, okay, there's Facebook, and here's a recent one. This one, as I told you, there was a great setup at the close today, and I don't mind saying this. I was super busy today, super busy. I have 3 little kids, a lot going on here at TheoTrade. I was actually working in the morning on a couple of calls and so forth. I set this up here at, by the way, I'm on Pacific time. I'm in Arizona, so I'm on Pacific time. But this is actually a trade that I put on at 12:03. There's what? There's 57 minutes to the close. I closed this just after the bell. You can actually close spiders. This is spiders. You can close it after the bell. I opened it for 303. I closed it for 365. I at no point in this trade, okay, had more than about 50 cents at risk. It was just a nominal risk. But as I said, there was a great probability-based outcome today where pretty much when I put this on, there was between a 60, okay, to 70% that presented me of sell-side activity. And you know what? I didn't want you to see like, oh, he knocked it out of the park here today. Listen, I made about 60 cents. I had nominal risk, but the trade was on for under an hour. And if you did 10 contracts, again, you don't have to do one contract, you do 10 contracts. It's the equivalency of making almost $650 inside of an hour. Ain't bad. Okay. And this is a trade that, you know, again, I trade the spiders a lot, and I did not just want to show you spiders and spiders and spiders and spiders. That's why I showed you a little variability. Depends on the underlying you want to trade. Me, okay, I like the spiders. Softer, gentler place to learn, but I never had more than about 50 cents of risk over here, and I was able to make 65 cents inside of what, 50 some odd minutes. Listen, what better time? Learn a skill set, and this is a skill set that'll last a lifetime. Okay. And I tell everybody right now, I really believe you're never going to have time like this again. Most people are still working from home, okay? And if you are, this is pretty part-time. As I said, today I was crazy busy and really only got to trade like that last hour. If you're quarantined or just hanging out at home, working at home, I think this is a great way to emerge stronger and in great financial shape. A little bit about what some of our members are saying. This was all from intraday trades. This was actually Matt's at 165 points in the NQ. This is a futures trader. This is Jesse. Cleared $1,500 in 2 days off of Bed Bath & Beyond. This was actually, again, intraday trades off 2 days of trading. Mino made 60% on Boeing call spreads. Okay. John just sold my remaining, APA calls. Again, these are all what we call scalps. This is intraday stuff. 23% of the day. Take the 670%. Listen, if you don't have a huge amount of time, that's fine, okay? If you want to, trade an hour, a couple hours a day, but what we can also do is we can actually teach you to set up a probability-based outcome early in the day and turn around and close it at the end of the day and use set and forget order types. Now, intraday trades, it can be hands-off. I don't mind saying, if you've got the time to sit in front of the screen, okay, if you've got that time to sit in front of the screen, that's fantastic. By the way, somebody was asking how come I only had 50 cents at risk. Because the option that I traded today, I want to show you something on that. How can I only have 50 cents of risk? The option that I was trading only had an hour to go to expiration. Okay, obviously limited movement. If you look at the option, it was a 315 put. Okay, I couldn't make that much on it, but I also couldn't lose that much on it. The option didn't expire today. That option actually expires when? Tomorrow. So I don't mind answering some of the questions over here, but you got to know it took an hour today to, pull $650+ out of the marketplace. And that's it. I mean, some of the characteristics of intraday options. And I was stressing this earlier because you're trading on an intraday basis. It has to fit these attributes. The attributes of intraday options with quant analysis are undeniable. You have minimal capital exposure, right? You're trading with, you saw a trade I did for 60 cents and I lost the 60 cents. And then today I had, $3 at risk, but I really only had about 50 cents because I had an hour to go to expiration. Okay. So offer weekly options expiration. Several products offer 3 expirations per week. All right. Offer viable risk reward. Almost everything I showed you. Okay, your characteristics, if you're intraday trading, it's got to have viable risk reward. Risk is limited to precisely your comfort level. There's no need for stop orders. Can be traded in retirement accounts. Absolutely, you could do this stuff in your retirement accounts because what I just showed you was done in my retirement account. It avoids the mass risk, the magnitude and fear produced by futures contracts. Chocolate covered hand grenades. The trades need not be continually monitored. I mean, if you know that you have 62 cents at risk, are you going to sit there fretting all day? You're like, maybe if you did 10 contracts, but do one. Be Captain One Lot. Put on a cape that says, I am Captain One Lot, and Captain One Lot will ride again. Because if you did one contract, you'd literally have $62. And somebody goes, what about commissions? What about commissions? It could cost you 65 cents. We're in utopia, people. Utopia for traders. Okay? Number 10 over here. A trade can produce returns far beyond the max risk. I can risk 62 cents. I might be able to pull $4 or $5 out of that thing. It's an excellent tool for those seeking returns to build a smaller account. A large account or small account, but I'll tell you what, if you have a smaller account, you can get some serious activity and some trades done. Now, building intraday option trades, listen, do not let the options portion of this intimidate you. Nothing could be easier than understanding I buy an option, I sell an option. The trade below, and I put a little example trade. Trade below is being done for a $2.10 debit. But you got to understand, okay? Even though I say don't let options intimidate you. Options are the quickest, the fastest, the safest, easiest way to get where you want to go in the markets. But you have to know how to use them correctly. And I again, no matter how many presentations I do, I always give people the same analogy. You want to go out and you want to cut down a gigantic tree? Is that even allowed these days? You wanted to go out and cut down a huge tree. You got to use a power saw. Why? Because if you use a hand saw, it's probably going to take you 2 years to cut down a tree and you're going to end up killing yourself. Okay? But the funny thing is, you can use the power saw. You don't know how to use a power saw correctly. You're going to lop off a couple of fingers, right? Options are the same thing. Options can be quick, clean, safe, easy. But you have to know how to use them correctly. And all the right questions are coming up. People are like, when do I do this? When do I do this? You have to know. Okay? Listen, you can trade intraday, using options. Maybe you don't know anything about options, limited options experience. Again, don't let that part intimidate you. You need this strategy. You need these strategies for the foreseeable market future because people are going to get killed when this market starts to turn. We've had 3 months of nothing but upside. And I hope that everybody that's listening tonight, and there's almost 1,000 people in here, I hope everybody that's listening tonight hears just that. Mark my words. People are about to get torn apart. I don't know if it's coming next week. Could be coming right now. People will get torn apart. We have all, that have experience in this business, we've seen this movie before. When people are just out there and they're like, yeah, man, I could just pull Scrabble letters out of a bag and pretty much make money in this business. That's going to end. And it's going to end very, very badly for most retail clients. Listen, we can show you how and we can show you when to place these trades. It takes a few hours. TheoTrade creates detailed recipes for every strategy, including intraday options with quantitative analysis. And I like to use some of the same analogies again and again, but this is, I think, an important one. Bake a cake, use a recipe. Trade, you need a recipe. Most people don't have one, okay? And when I say bake a cake, use a recipe, I mean a recipe, literally. Step 1, check. Step 2, check. Step 3, couple of eggs in there, check. Step 4, turn on the oven, check. I mean, you have to know what you're doing in this business. Trading is not about, morphing the rules on the fly, okay? It's got to be definitive. Listen, this is what you need to know to successfully enter, and more importantly, exit intraday options strategies. First, what makes a viable intraday options candidate? Now, again, you just saw me. I used the spiders. I used Facebook. I used Intel. I used the spiders again. I don't mind telling you, I like the spiders. You want to know why? The spiders offers Monday, Wednesday, and Friday expirations. It, to me, is like utopia. It really is. I don't mind saying I could trade the spiders every single day, be happy for the rest of my life. Okay, I like the spider product. It's got some volatility right now too. That's not the only product though, because some of the good setups come on other products. All right, and you got to know what volatility should I seek out. Choose the wrong volatility, you're already dead. Right? People go, well, you know what? I'm going to go out there. I'm going to trade me some Tesla. Okay? Listen, I trade Tesla. I trade lots of options on Tesla. I do not trade that on an intraday basis. Okay? You're going to get killed. It has nothing to do with the risk reward will be off. It has too much volatility. You will get killed. There's just no if and or but about it. You lose edge in the higher volatility. Too low a volatility, there is no edge either. There has to be a sweet spot. Then we have to come into what options expiration do I select? Okay, this is variable. Have you ever looked at the spiders? This is the spiders. This is a screenshot that I took today. You know what it is? Here's a 1 day, a 3 day, a 6 day, a 7 day, an 8 day. I mean, look at the options. There's a lot of options on those options. It's insane. You got to know precisely what expiration to select, okay? And when it's intraday, you don't have a whole lot of time, right? Seeking out the right volatility. Again, what should be the delta of the option I buy? Delta, delta, delta. Some people go, I don't even know what delta is. It's the rate of change of the option for every dollar increment move in the stock. Delta, okay, is critical. You actually, again, you don't have to be like an option geek. We just say, hey, this is the precise delta. It's a 62 delta. It's a 58 delta. It's a 52 delta. We'll tell you the exact delta to use. All right. What market factors do I look at before entering into an intraday options position? Should I look at the bonds? Should I look at volatility? Remember, volatility futures. That was good stuff. You looked at that a moment ago. So I looked at the Russell a lot. Like how do I actually put that picture together? All right. Can I do this in an IRA? The answer is simply yes. And then more importantly, some people go, what about day trade margin restrictions? Raggy. Yeah, we could show you that too. Day trading margin restrictions. Okay. Understand. Okay. If you don't have $25,000 in your account, immediately people go, I can't do this. You absolutely can. Okay. And we can show you precisely how to do that. There are products now, okay, that circumnavigate all the day trade margin rules. It's called PDT, which is pattern day trader. No, pattern day trader. Okay, we can circumnavigate that. How do I build a trade? I think most people can figure that one out, right? I go out, I buy it. It's not that easy. You got to know the right volatility, the right expiration, the right delta, okay, the execution of it. Like, what's the right amount of risk for me? If you're trading with a $2,000 account, a $10,000 account, a $25,000 account, a $250,000 account, allocation, it's everything. You want to grow the account. Listen, let me show you precisely what we do here at TheoTrade. We create recipes in trading. When I say we create recipes in trading, I think the way to describe this is we create checklists in trading. All right. Would you like to learn how to create consistent intraday strategies and setups the right way? So let's discuss criteria. What is that? When I say we create recipes in trading, it's criteria. Right? Listen, trading all becomes about answering the what ifs. When I say what if, what might be a good stock ETF candidate for an intraday trade? What's the correct options expiration to lower my risk? How much capital do I commit to intraday positions? What strike price options do I buy? What about the day trading margin restriction and growing a small account? What should my allocation be? We have those answers. we build recipes, checklists, okay? And when I say a checklist, and again, here's another analogy I use all the time, okay? You get into an aircraft. You're not the one flying it most of the time, but if you get into an aircraft, the pilot sits up front and goes through. And by the way, everybody has been on an airplane that at some point has been delayed like 30 minutes. The pilot gets there a little bit late, and they still open up a physical checklist, and they go, check, okay? Check. They don't just turn the key in the ignition and go, yeah, baby, okay? I mean, your life's on the line. Their life's on the line. You got to go through a checklist. Well, here, you know what? Your physical life's not on the line, but your life savings is on the line. Most people have no clue. They just go into the marketplace, blind. Maybe you have a little bit of risk analysis that you use. We have a checklist. Our checklist has every unique variable. What if the market goes up? What if the market goes down? What should my risk reward be in here? I'll give you the exact option to trade. Once you're into the position, how do you actually exit it? What should be the percentage return? Depending upon the number of days to expiration, the delta will actually change. Every variable that you can come across. And I'm telling you, every variable. TheoTrade is the answer to your questions. We'll give you the right probability. How many option contracts do we do for the account size? When do I close the intraday trade? What if the stock sells off big? The correct return for the strategy? What if we rally massively? Can I fix a losing trade? It becomes how, it becomes why, it becomes where, it becomes at what price. It's just the beginning, though, of the variables that you're going to start to face while trading options on an intraday basis. And I don't do this to overwhelm people. Like, you got to know, like, boom, all of a sudden the market sells off big. Refer to a checklist. Refer to the checklist. What do I do? Okay. You got to have something there. All right. Listen, you could read what an option is. Everybody, you can Google right now. You can Google right now what an option is. Maybe most of you have, maybe you've even traded an option. Most of you probably have, right? Okay. But do you have actually a criteria for success? Do you have a recipe for success? And what we build here, okay, and what makes TheoTrade unique? 20 plus years of trading experience. That's just me alone. That doesn't include, okay, the other 7 full-time instructors that we have. Access to client order flow for 15 years. A lot of the criteria, a lot of the checklist comes specifically from us doing detailed research in what works and what doesn't from client order flow. We viewed and studied million accounts. To say I wasn't the only one here at TheoTrade. I'm not the only one that worked at TD Ameritrade. A lot of us actually come from the brokerage business. I ran the education division for 15 years at a firm with the largest option order flow in the entire industry. At the time that I left TD Ameritrade, there were 7 million accounts that we were actually studying. Literally, what we do here at TheoTrade. I mean, what we do here at TheoTrade, we're still learning from the clients every single day, okay, in every way, shape, or form. Criteria, though, is your recipe for success. The following strategy, this entire intraday setup and the corresponding criteria, okay, which is the checklist, it requires the utmost attention to detail. And we spent in this strategy years and years fine-tuning it, fine-tuning the criteria, following the steps. Follow the steps to build a trade. We put together a course. It is ready to go. And we like to do this because we recognize volatility is here. It's now. People are trading on an intraday basis. This one's in the can. It's ready to go. It's consistent intraday strategies and setups. I am the trade instructor. It is a 4-hour class. It's available immediately. By the way, you can download it too. The course is available immediately. The class slide deck, okay, that includes entry and exit criteria, okay, which is the checklist. It's available immediately for download. The course is archived. Right? You can access it 24/7. When I say you can download it, here at TheoTrade, we have our own mobile for Apple and for Android. So for iOS and Android, we have our own mobile applications. What the 4-hour class takes you through, okay, is the criteria. What the 4-hour class takes you through is detailed setups. If you liked the quantitative side of this, where I actually built the probability-based model on looking at things like bonds, like looking at things like S&Ps, by looking at volatility, we go through that in this 4-hour class. But the other main focus of the class is the right option to select time and again, going through these checklists to create not only a probability-based model, okay, but the right option to select and execute the trade at the right time. The course is $497. Now, before I go any further, because this is where a lot of people go, it's another class, another $500. Listen, TheoTrade, I like to tell you this to people right up front. We're a little bit different. Okay, now I'm going to give you in just a moment here the curriculum for this class. And this is one of, without a doubt, one of the most in-depth classes we have ever put together here at TheoTrade. This class, it took me countless hours to build the checklist, to build the criteria. In fact, of all the classes, in terms of a memorable class, of me putting the class together, okay, I think my wife was ready to leave me by the time this class was done. And when I tell you it's $500, you're going to learn more in the first 20 minutes of the class. It'll save you more than $500, okay, by the introduction of it. You're going to be shocked at what we do in this class because, again, I put a lot of weight into a lot of classes. This one does it for me, okay? If you're going to trade intraday, you need to see this class because people are going to lose more than $400 or $500 instantly. But before I go on, I want everybody to recognize, listen, I've been around the education industry. Even though I worked in the brokerage firm, I worked in the market making side of the business, and then I worked in the brokerage business. And at the brokerage business, I was the educator for the brokerage firm. But I've seen everything in this business. When I say I've seen everything, how many of you, okay, tuned in this evening? How many of you tuned in this evening have taken a class somewhere at some time? Okay? Because I really want to know the answer to that one. How many people have taken a class somewhere sometime? Because I think that people have probably been through the gauntlet of a lot of classes. And the stress that I want to put is at TheoTrade, we get it. We built TheoTrade to differentiate from any other education firm. And by that I mean this, okay? And I'll just give you a little foreshadow of what I'm about to show you. Because I'm telling you, you want to stay tuned in tonight. We provide unbelievable resources to our clientele. Like no other place does what we do here. So people go out and they pay $500 for a class, right? And then after you pay $500 for a class, okay, whoever it is sells you an indicator for another $500. And then after you buy the $500 class and then pay for the $500 indicator, then you have to take a class for $500 to learn how to use their indicator. So now they've got you for $1,500, and then they say you have to join their chat room. And because you join their chat room, okay, that's going to cost you another, $150, $200. It's ridiculous, okay? Let me just tell you, before I get into, we're going to provide you some bonuses tonight. And I hope that's all right with everybody because we do it. This is unlike anything else that you've ever seen. And it's unlike everything else because we don't just give you a class for $500 and then give you a good pat on the tushy and go, you go trade intraday. You got to be out of your mind. Okay, you're not going to learn anything for a class for $500 and just walk into the marketplace. You have to have somebody that is willing to hold your hand. And if you don't, that ain't the place for you. And I tell people that right up front. I don't care how many times you want to email me after taking our class, email me, okay? We will support you in every way, shape, or form. Now again, to explain in more detail, we don't just give you a course and walk away from you. We will give you everything in every way, shape, or form to support you in this business, period, hands down. Allow me to explain here momentarily. First, I'm going to take you through the curriculum for this particular class because I put a lot of weight. Again, in terms of classes, I don't make any joke about this. This class, putting the PowerPoint together alone, okay, we're talking hundreds of hours of work for a 4-hour class. That's why it's recorded and ready to go because I had to edit a lot in this particular class. It was painstaking. Listen, the curriculum. First, we're going to get into, in the curriculum, this is a 4-hour class, how to create intraday trades, probabilities on your side, minimize risk, maximize returns, how to analyze markets. So this is actually setting up a probability-based analysis. The option setups, we're going to actually give you the criteria for the option, okay? How the market provides predictable or manipulated ranges. We're actually going to talk a little bit about expected move. Little known market insights and what drives the market. Okay, so you're going to look at things like volatility futures and bonds. Okay, so you can get on the right side of the trade. The tools and strategies for analyzing market conditions so you can trade with confidence. That's actually learning different products. That makes a difference. How to minimize your risk and maximize returns. Again, that comes into option selection criteria. Then we go how to generate returns intraday with a small account, retirement account with minimal options experience. Which stocks and indices are going to make the best candidates? Obviously, selecting a candidate is going to be huge. What strikes? What expiration? Okay, to select to give you the highest probability of intraday success. When to open? Okay, when's the best time to close the intraday trades? What market correlations to watch intraday so that you can actually manage your swing or long-term investments? Why intraday trading does not mean you have to be glued to the screen all day. And then again, what the best times these setup actually work for intraday traders that can't necessarily watch the markets all day. Listen, that's that's what we mean by like curriculum. This class is 4 hours. It's $497, but I'm telling you right now, okay? And I stress to you, we ain't going to stop there. So bear with me here for a moment. Oh, by the way, what our clientele are saying. I'm going to throw this out. This is from Gary M. This is the second time I've been to Don's service. Took a while to sink in, but in-out spreads are saving my beep. And everywhere they turn, they fit. Also using risk twist trades on both of my accounts. It's embarrassing to think of the tens of thousands I've spent on option info and other classes. Don's classes are the greatest. Don, I closed the TLT risk twist spread for 127% gain. Price was moving around so fast, I ended up using a market order. Pretty excited to see with the whole RTS cycle and how well it worked. That's from Vicky W. Listen, as I said a moment ago, you want a bonus, and we go beyond one class or one indicator. So we're going to give you a little bit about the full Monty right here. We understand what people want in terms of education. They want everything. They want everything to be able to trade intraday. They want to be able to trade on a day-to-day basis and invest. They want it at one place. They want it at one price. You want indicators. You want classes. You want everything. I get it. The first bonus we have tonight, we're going to give you access tonight, now, over 93 trading classes. So when I was leaning into that a moment ago, yes, okay, this evening is about consistent intraday strategies and setups, okay? It's a $500 class. But our belief is that one class, one class is phenomenal. It's going to be a lot. But we give you access to every single class that we have ever done since the inception of TheoTrade from day one. Why do we do that? Because it's not right to just give you one class and walk away from you. It's just not right. And when people do that, listen, could we go out and charge $500 for every single class? Absolutely unequivocally, yes. You know what? When we first started out here at TheoTrade, we kind of looked at that and we said, it ain't right. It just ain't right, because all of a sudden, what are you doing? You're feeding off of people paying for classes. We want to feed off of people with success. That's it. So we give you the consistent intraday strategies and setup class. Okay, that one, it's available immediately. The rest of them, these are archived. These are archived. Small account with in-out spreads. The in-out spreads class, it's the single, okay, most viewed class at TheoTrade. Hands down, okay, there are tens of thousands of people that have been through this class with phenomenal reviews. Surviving and thriving in extreme volatility. Volatility back spreads. Today, I actually showed you. I started off with some back spreads. Guide to small account growth, in-out spreads. Growing a small account with black book spreads. How to collect income being short. Next, this is actually the risk twist spread class. Probably one of the most prolific trades that we've ever provided here. High probability spreads, iron condors. Look, selling spreads, selling iron condors, sell premium, minimize risk. Day trading, NASDAQ futures. You want to learn NASDAQ futures? Okay. Covered calls, essential skills for consistency in trading, top 10 skills for growing a small account, pairs trading. People, we have 93 classes. And those 93 classes, it's not just me. Okay. Again, we have many full-time staff, which I'm about to introduce you to. If you went out and bought each one of these classes individually, it's over $9,000, okay, in classes alone. Tonight, from day one, we give you access to all 93 classes. Why? It's the right thing to do. All right? These are the instructors at TheoTrade. I just need you guys to understand. 93 classes, it's not just me. On our crew here at TheoTrade, we have Professor Jeff Bierman. We call him the professor because he's a professor. He actually teaches a few undergrad classes, but now graduate school at Loyola in Chicago. So you can go see Jeff Bierman at Loyola. I believe right now for graduate school, he's $53,000 for a year. Graduate school. He's also an analyst, a trader, and he's the former chief market technician for TD Ameritrade. Jeff actually worked in my group at TD Ameritrade on the education side of things. By the way, Jeff Bierman is also, I think his claim to fame, he built over half the studies in the Thinkorswim charts. So if you're looking for somebody that's technical analysis, I'm not your technical analysis guy, but Jeff Bierman absolutely is. Look at the instructors very carefully. We selected instructors based on different genres of trade. Here's Matt Williamson. He's a market neutral. He's a premium selling strategist. What does he do? Sells option premium. Corey Rosenblum. Now, I'm going to talk a little bit more about Corey here in a moment. He's our senior strategist and resident swing trader. Corey, what is his specialty? Ticks and futures contracts. Ticks, trend days, and futures contracts. Put a lot of stock into Corey because his trading results warrant it. Next in the list, Brandon Chapman, CMT. By the way, Brandon also hails from TD Ameritrade. Brandon's claim to fame. There was a class. Now, some of you know exactly what I'm talking about. By the way, somebody said, love Corey's book. Yeah, by the way, Corey's got several books that are out in there. Okay, people are like, yeah, I want to read them. You know, you can go out, you could buy his book. He's going to kill me for saying this. You could buy his book, or you could pay, the $500 and you get Corey all to yourself. I'd say pay the $500, get Corey all to yourself instead of reading the book. You can talk to the guy that actually wrote the book, Brandon Chapman. Brandon Chapman also wrote a book. He wrote a book for TD Ameritrade. Now, TD Ameritrade owned at one point the largest stock market education firm on the planet. And that stock market education firm had a class that was 18 months long. Okay, you know what they charged for an 18-month long class? Okay, they charged just over $24,000. Brandon Chapman actually wrote the book for the class, and he'll be the first one to tell you what we do here at TheoTrade will smoke what we used to charge $24,000 for at TD Ameritrade. Again, Brandon worked in the education group. He's a phenomenal guy. Okay, 18-month long course. We do more here, and we do it for a little bit less than, again, $24,000. Next on the list, Slim Miller. If you're not familiar with Slim Miller, get familiar with Slim Miller. He's a 43-year veteran stock options and futures trader. He was actually in the pits before, in fact, they even traded, before they traded options. He moved over from the futures pit into options when they listed options in the early 1970s. Last but not least, Tony Rago. He's our resident NASDAQ futures intraday strategist. Tony's job all day, every day, just calls out setups. All day, every day, just calls out different setups inside, okay, of our trading room. So bonus number one, again, I want to reiterate, bonus number one, we'll give you access to every course that we've done since the inception of TheoTrade. There's 93 classes, all of the classes, okay? You're going to find, okay, meet that strict guideline of criteria. There's some rigorous courses in here. It's spectacular. And people go, 93 classes. Listen, people, it's like tuning into Netflix. You name a genre, we cover it. You want to do pairs trading, you want to do futures trading and technical analysis, you name it. We've got courses and everything. That's why we hired specific instructors, each, again, with their own genre of trading. Listen, I'm an options geek, okay? Jeff Bierman, no. He's a market technician, okay? Matt Williamson, another option geek. Corey will trade a couple of options here, mainly futures. Brandon Chapman, macro. Okay, this is our guy. You want to know something about the Fed? Brandon's forgotten more about the Fed, okay, than we'll ever know. Slim Miller, it's just unbelievable. Nobody has more experience at this group than Slim Miller. Tony Rago, NASDAQ, all he trades is one product. He specializes in one product. Bonus number two, we're going to give you a TheoTrade VIP membership pass free. What that amounts to, okay, because that sounds pretty good, okay? What it amounts to is simply this. As I said, we don't give you a class for $500 and kick you out the door. We're going to give you 3 months unlimited access to TheoStream. We have a live trading chat room. We broadcast 6 hours a day. Okay, traders provide real trade ideas. I want to make this clear. Okay, you can sit there all day if you want. We trade throughout the course of the day. All of us trade throughout the course of the day. Now, obviously, we take turns. It's my turn, then it's Jeff Bierman's turn, then, then maybe Matt comes on, and then Corey comes on. It goes on like that all day long. And you have little Tony Rago, little Brandon Chapman. Everybody is trading throughout the course of the day. We do text and push notifications. We have 5, unique trading portfolios. We have a duration portfolio, a short-term portfolio, a black book spread. We have daily coaching sessions. What's a daily coaching session? It's continued education. You know who actually does the daily coaching sessions? Jeff Bierman. Why? Because he's a professor of finance at Loyola. There's nobody better. He moonlights with us. Literally, he moonlights with us. And the instructors, I put a huge amount of weight into this. We answer trading questions via email. You can email us and you can say, am I doing this trade right? You don't have to email us and say so I have a friend that's thinking about, forget all that crap. Listen, most of us, had huge experience in the brokerage industry. Everybody here at TheoTrade, everybody has over 15 years of experience in trade. Most of us worked either on the market making side of the business, in the brokerage side of the business. Jeff Bierman actually ran a hedge fund for a lot of years before, hanging it up, coming to TD Ameritrade. Then he ended up as a professor. You couldn't wait to do that. Anyway, you can email us and you can ask us directly. Am I doing this trade right? You don't have to say like a friend and in a hypothetical situation. Forget all that crap. We know the rules inside of this business. Email us. Listen, I put so much weight into the email. That alone's worth $1,000. It literally is. We're giving you this. And we give you this because, again, it's about support. By the way, at this point, before I go any further, I should tell you, as of last week, we just hit over 6,000 clientele that are now at TheoTrade. There are now 6,000 clientele. We're constantly adding, clients. And that's why we're constantly going to be adding new instructors as well, all with this kind of experience. I put huge weight into all of this. Obviously, not everybody can tune in for 6 hours a day. All of it's archived, but you don't have to tune in. Maybe you just want to watch a couple classes. Maybe you just want to, tune in periodically. But a lot of you right now, you're home throughout the course of the day. Check out what we do, right? By the way, somebody's like 6,000. Yeah, 6,000 now clientele here at TheoTrade. We just broke through that barrier last week, and that ain't bad. All right. We're giving you $1,000 support, trades, and insight. It's included. Right. Oh, in addition to bonus number 2, we give you access to all the proprietary indicators that we have. Anything that we build. When I talk about proprietary indicators, we build scripts, right? Tonight, I'm actually going to give you Quantix. We're going to give you Quantix tonight. Quantix, it's not just near and dear to my heart. When you're in the chat room tomorrow, you will see me using Quantix every single day. I use Quantix every single day for intraday. We give you auto expected move. We give you gravity points, TheoTrade, RSI, Laguerre, next generation squeeze indicator, Tony's NQ levels, IV rank versus percentile. It just goes on and on. Oh, the SPX expected move. You know what? I update the SPX expected move every single week. Unusual options activity. We give you all of our indicators from day one. By the way, there's also classes on every indicator that we have. It's $1,800 in indicators and scans. Now, on top of that, so normally we just have 2 bonuses. Tonight, we actually have a 3rd bonus. You want to know why we have a 3rd bonus? Because we have a class coming up, and you guys should know about it. So people, they tune in tonight, and they go, why should I enroll tonight? I'll tell you why. Because Corey Rosenblum is actually doing a class this Saturday live. You do not want to miss a live class here at TheoTrade. We have 6,000 clientele that'll be packing into the chat room literally early on Saturday morning. You're like, I can't do it. It's going to be immediately archived. We archive this as fast as he finishes. The class is archived. Again, it's the ultimate insider's guide to intraday trading with an edge. You guys are going to absolutely, if you're intraday trading, not only will we be giving you the intraday course that I just discussed, which predominantly is about options. Cool thing is Corey's actually going to marry that with a little bit of futures discussion. By the way, his futures trades can be employed using options. He is going to talk in extent, all right? I cannot think of a better upcoming course for intraday trade. And that's actually, this is the primary reason tonight. I mean, again, I can't put enough weight into what Corey has done here at TheoTrade. Corey's been with us for quite a number of years. So almost since the very beginning of TheoTrade. And I can't put enough weight into him as an instructor here at TheoTrade. If you would like to know a little bit about the curriculum, again, this is an extra bonus. Now, we do a lot of classes here at TheoTrade. I just did a class last week on bonds. Okay. Again, all of the classes that we have. So we have 93 classes in the can. This is one that is going to be a perfect combination with the consistent intraday strategies and setups that we just presented a moment ago. So it's a live class. Here is another curriculum. This is the curriculum for Corey's class. Okay, so Ultimate Insider's Guide to Intraday Trading with an Edge. How to use market internals. Okay, take high probability intraday futures trades and consistently grow a small account. How to analyze markets. By the way, Corey's going to be a vast departure from my style. Vast departure. I think you guys will love it because, again, it merges beautifully with this. How to analyze the markets so you can read and anticipate the market's direction. How to know when you can ride trend, okay, safely, and when you can expect intraday reversal. How to identify what they call the tick kickoff. Now, that's like proprietary to Corey. It's a tick kickoff method for giving you a heads up, okay, when a large intraday reversal is going to happen. Big divergences. How to trade those tick divergences. A specific strategy for aggressive scalps, okay. Futures traders, okay, looking to pick up 35 S&P points per day, okay, on average, especially on low volatility range days. So this is kind of interesting. Again, it's a vast departure. Number 6 over here specifically, low volatility range days, and Corey's able to pick up like 35 S&P points. That is huge. All right. Number 7, how to trade the impulse buy or impulse sell strategy so you know when you can scalp off intraday highs or lows. This class, again, it is included this evening. It is included, of course, in TheoTrade. So I'm going to recap everything. Before that, this is actually an email from Todd Summerall. I'm just going to read it to you really quick because I put a lot of stock in some of these emails. Don't know if you remember, but I emailed you a few weeks ago and told you my delta was a positive a couple thousand or more. You told me to smash it or I was going to be in trouble. I smashed it. You saved my account. I just want to thank you for your information. Before Theo, I had no clue about Portfolio Delta. Big hearty thanks to you and all of your team. My finances would have been a goner without your advice. The reason I threw this up here, by the way, like Todd said, you can use it if you want. Thank you, Todd. I will. The reason I threw this to you, because I want you guys to know, you can email us and say, like, what do I do with this position? And if I say something like smash it, that means get the hell out of there as fast as you can. Don't take it the wrong way. Okay. This again, will give you every trade idea that you need right up to the edge. Right, here's another one from actually Brian. This comes in on March 16th. The reason I brought this email up March 16th is because that was almost the most hideous marketplace in the history of markets, right? So Brian goes, wow, I want to thank you again for what you've taught me in the last 2.5 years. I bought into what you taught me about risk twist spreads, duration positions, and I started to trade options almost a year ago. I missed out, okay, in the last move of the market up, but at the moment my IRA is up 14.8% for the year. By the way, that was on March 16th, the most hideous move pretty much in the history of markets. This gentleman's actually up 14.8% for the year. What I've invested in TheoTrade has been so worth the money. That's thank you, Brian. Listen, at TheoTrade, we include everything. Everything you're going to need to invest, everything you need to trade. We do classes, we do coaching, we do email access to the instructors, a live trading room and live trades, indicators and scans, mobile access 24/7. It's everything that you're going to need to succeed. I mean, what we've strived to build here is TheoTrade. It's the Netflix for traders, and that's why we have 6,000 subscribers here tonight. Okay, Theo is $297 for 3 months. That's ultimately the deal we put together, and it means a lot to me that you guys understand that we're here to support you every way, in every shape or form. Okay, to run through. We'll provide you, again, access to 93 classes. But the class that we discussed tonight is consistent intraday strategies and setups class. It's archived immediately. Okay. Then we give you access to, again, the 93 classes, all available immediately on demand. The new monthly classes, guess what? The new monthly class is coming this Saturday. Okay. This Saturday with Corey Rosenblum. Live trading chat room. The live trading chat room, we're going to broadcast for 6 hours a day. In fact, tomorrow is Wednesday. Tomorrow, we actually broadcast for 7 hours because we do what's called a happy hour, okay, which is a nighttime broadcast. We give you 59 proprietary indicators and scans, text push notification of trade ideas, 5 separate portfolios, daily coaching sessions, every genre, stocks, options, and futures, and you can email us, and we'll get back to you. go right now to TheoTrade.com/day. That's D as in Don, A as in Apple, Y as in yes. It's TheoTrade.com/day. Now I'm going to detail a couple of points here, and then I'm going to answer a few questions. Somebody actually came up and said, they want to see what some of the classes look like. I'm actually going to show you that here momentarily. You know what? I'll pull it up here initially. So again, it's TheoTrade.com/day. When you want to see what the classes look like, this is the archive. This is where 93 classes live. It's like every genre, and option strategies, and option newbies, and technical analysis, and day trading, and stock classes, futures and bonds, and hedging, and trend trading, okay, pairs trading, and mindset. If you want to see what option strategy classes look like, again, I apologize as I'm going through here. I got to log back in as we actually go back through all of the classes. We're going to log ourselves in over here. And we're going to go right down, okay, to our archives, and we're going to cruise back to class archives. So as you start to go through the class archives and the option strategy classes, okay, sell premium, minimize risk, iron condors, butterfly's guide to weekly returns. A lot of these classes I did do. I am the options geek, selling options for a living, guide to maximum edge trading earnings. This is just a smattering of some of the classes. Black book spreads, guide to surviving and thriving extreme volatility, controlling your risk, volatility crash course, back spreads, straddles class. It just goes on and on and on. Again, you name a genre, we've got it over here. Now, in addition, okay, the fact again, it's $297, and somebody already asked the question. By the way, the link to join is TheoTrade.com/day. So that's the link ultimately to join. One thing I got to tell you, because everybody's like, I want to join. That's the link right here to join, and I'll show you that again in a moment. It's $297 for 3 months. It's not a membership though. Like everybody asked that question, there's no reoccurring. It's a one-time fee. It is not an introductory fee. Everybody asked that question too. What do I have to pay? After 3 months, if you want to do this again, it's $297. But we have to ask you. Like, this is not, and I like to make this comment because it's especially true right now. This is not a gym membership. No one right now really wants to go to the gym. Why does no one want to go to the gym? Oh, because you could get sick at the gym, right? So how do you get out of your gym membership? They tell you you have to come to the gym. That's not the way this works. Okay, this is not a gym membership. It's a one-time $297 charge. And then you have to realize we have 6,000 members. Okay, why? Because people want to continue to do this. We want you to continue to do this. In addition to that, so again, it's only $297. It's for 3 months. It gives you access to everything that we discussed here. Okay, and there's a lot more. For the first 30 people that sign up tonight, we'll make it a completely riskless trade. Listen, it's everything that you need to start trading from absolute novice to expert. When I say novice to expert, somebody else already popped in there. They go, I'm totally new to this. Like, listen, if you're brand new to this, this is a start here menu. You know what the start here menu is? It's you can actually like have a place to start. Options 101. If you're a complete novice, fantastic. If you're an expert, that's when you cruise over to the archive and just have at it. I mean, does this look a little overwhelming? This is just one genre of trade. Look a little overwhelming? It is. You know what? For the money, I think people would rather be overwhelmed rather than underwhelmed. Okay? But we'll give you a money back guarantee because I have no problem in any way, shape, or form saying this. Okay? The thing for 3 months is a whopping $297. Listen, if you are not satisfied, I'll go as far to say thrilled with what we do for $297, email us support@theotrade.com, provide us the details of your trades, okay, and receive a full refund. Listen, we don't want anyone here at TheoTrade that is not ecstatic to be here at TheoTrade, okay? It's $297 for 3 months. It's not the end of the world. If we have to give you your money back, we'll give you your money back. Here's the money back guarantee stipulations. You got to do 10 trades. You can't, and the reason we do this is because we know what people will do. People will sign up for $297, watch every single class they possibly can, binge on us for 3 months, never do a trade, okay? That's not what we're about. To make this fair, You got to do 10 trades. You have to use our criteria in the next 3 months. We'll do more than 10 trades in terms of texting out trades. Your initial account value has to exceed $2,000. That ain't our rule here, okay? If you want to trade options, you're supposed to have $2,000 in the account, all right? You must follow our criteria, okay? Infinity spreads or whatever criteria we give you. You got to follow our criteria. You can't make up your own criteria. Oh, and you have to have and provide us real account statements. So, and by the way, I think that this is fair because people say, like, we've had people, we did this and we didn't have any stipulations. We'd say, if you're not satisfied, just get the $297 back. People would come here and just binge off of our stuff. They just binge off our stuff. And that wasn't fair to me. It just really wasn't fair. To make it fair, it's $297. You do 10 trades, you're not happy, we'll just give you your $297 back. And by the way, we only do it, okay? And again, we only do it for 30 people. Why do we do it? It's for the first 30 people that sign up tonight, okay? I'll tell you exactly why we do that. Because I'm not looking through, okay, 6,000 people's trade statements. It's insane. So we do it for the first 30 people that enroll tonight, obviously as an incentive. It's a matter of looking through all those trades. Listen, the other thing is, we give you here at TheoTrade during these 3 months unlimited email mentoring. You know, we at this point with 6,000 members, listen, we're trying to keep the size down. Okay, we have to constantly adding more and more instructors to overcome the fact that 6,000 people email us a lot. Send us your trades, bounce ideas off of us. Listen, the 297 riskless offer, we've never made that available before, with consistent intraday strategies and setups, and Corey Rosenblum's live class. All right, listen, either one of these, it's worth a lot more than $297. The Ultimate Insider's Guide to Intraday Trading with an Edge. Listen, Corey hasn't done the class, but Corey actually sent me the slide deck today. You guys are going to love his class. You're absolutely going to love his class that's coming this Saturday. So, again, it's a completely riskless deal. Like, you know, I'll give you the link here momentarily. Somebody else was asking for the link. There's 30 spots. I will let everyone know when the 30 spots are filled tonight. And again, we'll work with you directly. It's unlimited email mentoring. What our members are saying, last one I'm going to throw out here, I've learned more in the past 4 weeks managing and defending my portfolios than I've learned in my entire trading life. Nothing I've learned would have been possible without having tuned into your teachings for the past 2 years. Also, my atomic hedge, that's a strategy we use, took a large sting out of my long-term IRA destruction. You clearly don't have to be a teacher, but thank you for doing so. That comes from Chris. So that one's on March 26th. I picked March 26th because that was also very close to the bottom of the marketplace. Listen, just to recap everything, this is everything you get access to today for $297. Again, I constantly reiterate, that is not a reoccurring payment. It is a one-time $297. It's not an initial thing, nothing like that. Obviously all the different courses here, all the different bonuses, the Ultimate Insider's Guide to Intraday Trading with an Edge. Again, everything in terms of access to 93 classes. Apparently I put an extra 9 in there. I apologize for that. It's 93 classes, day trading, swing trading, every genre of trade you can imagine. Email us trade ideas. Again, the link. I just wanted to pop open the link here. If you follow me now to TheoTrade.com/day, follow me to this link for the quantitative indicator. It's cumulative ticks and quad indicator. In fact, I'm actually going to pull that up. If you follow me over to the link right now, and again, I will also pop on the page. Just hang with me here for a second. Here we go. Right there, it's TheoTrade.com/day. If you need to talk to us immediately about this, you can type in, okay? You can type in questions, but we're also here in live chat, so you can actually see our chat now. Stacy's actually there to answer a couple of questions, but all of us in terms of traders are also in here. So again, it's TheoTrade.com/day. A few things I want you guys to know. Again, right up here, we put 30 riskless spots left. Here's obviously one of the bonuses tonight, which is attending the live class this Saturday with Corey Rosenblum. If you follow me over here, click right here, add to cart. Now, the reason I'm taking you over to add to the cart is I just want you to see, again, it's a one-time fee of $297. Okay. As you scroll down, Everything that's included is in here. The only thing due today is $297. Obviously, you can use PayPal and so forth. But again, this is not, and the reason I come into this page, it is not a reoccurring payment. It is not a reoccurring payment. It is a one-time $297 charge. All right. I'm going to answer some questions now, but as I come into this, and again, one last time, I'll throw this up here. It's TheoTrade.com/day. As you guys are enrolling, I will read off, okay, who is enrolling. It takes me about 4 or 5 minutes to actually see your enrollment, just to reassure those that are trying to get on the riskless spots left on here. I'll actually read off your name, okay. Before I go any further here, if you scroll to the bottom of this page, okay, you'll actually see this is the download right here for the quantitative indicator. So that's where you actually find the download. Again, for those of you enrolling right now, if you're enrolling right now, you do not need to go download that indicator. We're going to give you access to it and everything else anyway. So let's actually kind of jump forward. Let's answer a few questions that have actually come up in here. So hopefully I've gotten most of them already. By the way, TheoTrade's a one-stop place for all things options. Their content is rich with something for every level of trader. There are hundreds of archived seminars, coaching sessions, and of course, trading room access. The energy of the educators is palpable, and the fact that all content, save for a very few in-person sessions, is included in a membership fee. Theo is so worth the money invested. So I'll also appreciate this one. This is good evening, DK. I'm Don Kaufman. As a multi-decade risk manager for one company I work for, and owning 2 other businesses of my own, I must say your perspective on portfolio risk management is exactly how I attempt to explain those close to me with significant investments. Quantification via standard deviation is near long-term timeframes are critical considerations for responsible and successful endeavors, regardless of the underlying, market-related or otherwise. It was refreshing to listen to your perspective on the same today. Sincerely appreciate your efforts. Sincerest regards, Nathan R. So with that, let me get to some questions and answer a few. I also want to jump back for just a second and introduce you a little bit to TheoTrade. So, I showed you a couple of the archives, but this is TheoTrade. Like, this is what it looks like. Tomorrow morning, this goes live. Okay, when I say it goes live, right here, you'll be broadcasting. This entire screen will be filled with my screen, and you'll hear our voices, and we'll actually walk you through individual trades. I kick off on Wednesday morning. We'll actually post the entire schedule in here. Down below over here, this is where thousands and thousands of traders will interact in real time. So you can talk to any of our clients. We also post trades in here, constantly posting trades in the chat room throughout the course of the day. We also have a little status bar. Any upcoming information that we need you to have here is actually advertising Corey's class. This is exactly where you will find Corey's class on Saturday. So that's the live room. Again, the start here menu, if you're a novice, okay, start going through here. But, one thing occurred to me as I was going through here and talking a little bit about some of the archives, and that's this, okay? People always ask me, what's pivotal class? What changed a lot for you? If you're experienced, you got to watch Order Execution Part 1, 2, and 3. If you're experienced, these 3 sessions, okay? If you're worried about your $297 investment, don't be. Those 3 sessions will give you insights, okay, to how to execute trades like you've never seen before. Those 3 sessions alone, okay, are worth the cost of entry. For those of you that are experienced, you'll save thousands of dollars per year. If you trade, you will save thousands per year just watching a little bit about order execution. So as I said, here's the class archives, all the different genres and classes, okay? Then we have a member home. The member home, you can search anything. I mean, when I say you search anything, one of the trades that I do over here, like I can serve for serve up like in-out spreads. I'll just type in out. It'll pull up, okay? It's like a Google inside of TheoTrade. Every single session regarding in-out spreads, right? Small account growth with in-out spreads, okay, the ins and outs of in-out spreads, calculating in-out spread exits. It just goes on and on. In-out spread, setup quiz. We actually even quiz you on some stuff if you're so inclined. Again, Everything that you're going to need is inside here. Let me drop back for just a second and answer a couple of questions. By the way, I also threw the link down below over here. It's TheoTrade.com/day. Again, a lot of questions are actually popping in over here. Okay. Bear with me as I start to go through here. I'm going to go through some general questions, and then we're going to go through some of your questions. So some of the general questions that are popping in here right now. One of the ones that's pretty consistent. People always ask us, like, what do we need to get started? I think a laptop and internet connection, and quite frankly, I don't even think you necessarily need a laptop. I think you could probably use an iPad or any type of tablet these days, Android, because the trading applications have gotten phenomenal for some of the mobile devices. Internet connection, I mean, we really have everything that you need to get started from novice to the most extreme traders. And we cover both ends of the of that spectrum. So with that, and when I say novice to expert too, people, one thing I want you guys to know here at TheoTrade, if we don't have it, tell us, okay? That helps us in creating, if you will, new content, new products here at TheoTrade. All right, number 2 on the list, okay? Number 2 on the list. Listen, this is not a membership. It's not a membership. We will not auto-renew or bill you again. It's $297. What do you do after 3 months? If you want to do it again, pay $297 again. Number 3, okay? We're now providing weekly videos on things like infinity spreads. Okay, if you're into infinity spreads, and by the way, people are like, oh, what's an infinity spread? Infinity spreads, in-out spreads, some of the strategies, we are now actually providing weekly videos. So you can actually see all the moves that we make on some of the more complicated trades. And I just threw this in here because it comes up. People want to know, like, can I have support after this? Yeah, not only can you email us, but you can actually see some of the videos where actually, you can watch some of the trades that we're doing. Number 4 in here, we archive everything. Every single word that we say, we archive. Okay, we understand not everybody can watch trading throughout the day. Listen, we broadcast 6 hours a day. That's kind of cool. You can go back and you can just watch like an hour. And on our mobile application, we have a mobile application. You can actually download the archive, view at your leisure. But there's actually a speed up like function where you can actually watch it 2 times. I already speak pretty quick, but if you want to listen to me at 2 times the speed, I sound like a chipmunk. It's pretty awesome. But you can actually watch all the archives in half the time, or even go 3x. Okay. Number 6, you can email us anytime. And I put a big, huge amount of weight into this. You were going to receive a response within 24 hours. Like, people don't get it, right? They don't get it. You can email us, right? We don't just give you like a 2-line, like, yeah, do this. Okay. We'll give you detailed insight, okay, to trades and trade related questions. All right. Moving on over there. All right. You can gain access to every course, okay? Every course that we've got, literally for the previous 4 years. Every course, every coaching session, every class, the archives are searchable, as I showed you a moment ago. Name a trading topic, and we have an archive on it. Number 8, all the trades can be done inside of an IRA or retirement account, as little as $2,000 in the account. Number 9, well, we can help you get approved for options. People come to us all the time. And with that, when I say they come to us all the time and they say, I went to TD Ameritrade and I can't get approved for options at TD Ameritrade, we say, no problem. No problem. We can actually take you through the process of how you can get approved to trade options, and we'll walk you through that. And by the way, we have a great relationship with all the brokerage firms. It's not just TD Ameritrade. Yes, I showed Thinkorswim. Okay. Why? Because I was there. But one of the main people from TD Ameritrade left, and she now runs E-Trade. She's a great friend. So we have a relationship with E-Trade. We have friends over at Tastyworks. Why? They actually built Thinkorswim. Okay. You name a major brokerage firm, we have relationships there. And I think that's important for you guys to know. Listen, remember, there are 30 riskless trade spots available. 30 riskless trade spots available this evening. So by all means, okay, that's it. And I'm trying to actually read off in a moment here some of the names. Listen, get results, take action. enroll for TheoTrade. There's no risk to you. It's $297, and if you're not totally thrilled with it or satisfied with it, I should say, in the period of 3 months, send us your trades. You got to do 10 trades, and if you don't love it, we'll give you the $297 back. Again, it's TheoTrade.com/day. I am going to try to read and answer a couple of questions inside of here right now. So bear with me as I do try to answer a couple of your questions here. I'm also trying to read this in real time. Okay. All right. Just reading through. All right. Somebody said, thank you, Don. I'll be signing up from Southern California. By the way, I love Payson. Almost bought a house in that's basically where we live over there. I'm not going to read that one. That's actually great. So thank you very much, Steve. Sorry, I'm trying to read back here in some of the questions over here. Oh, by the way, somebody said, do you let all the members see all the trades, okay, that you trade? So I will tell you this. Throughout the course of a trading session, and we're effectively trading live, okay, yes, you pretty much see almost everything that I do. There are times, I don't mind saying this, where I'm not broadcasting and we'll do a couple trades, but those are the trades. Again, those are the trades that we would turn around, of course, and text out. Let's see if we get a couple of names over here. Okay, so those are the trades we'll actually turn around and text out to you. But for the most part, yeah, we give you almost everything that we do. And I say almost everything. Listen, I don't mind saying there are times where in the heat of the moment, I may trade and trade actively. If markets are crazy, though, I'll actually turn around and start broadcasting. We'll actually kick somebody off the air and I'll pop back in there and do a couple of trades. So for the most part, you're going to see, I would say, over 90% of what we would do inside of the marketplace. All right, moving along over here. Hang on just a second. All right, moving along over here. Oh, by the way, a couple of people that have been enrolled thus far. And again, I'm trying to read some of the questions at the same time as the names over here. So, all right, this is everybody under the riskless trades. And again, these are some initial names, okay, that are coming out. Carl M. from Texas, Catherine O. from Texas, Jose G. from Florida, Daniel L. from North Carolina. Looks like, hold on, I'm trying to read over here at the same time as read some of the questions. Prakash U. from New York, Ruben B. from California, Raman M. from California, Edward M. from Florida, Son D. from Virginia, John A. from Texas, Thomas H. from Virginia, Stephen B. from Minnesota, James K. from Illinois, Mark W. from New York, Rory W. from Florida, Richard L. from Florida. Then we have, sorry, I'm looking down over here, Andrew H. from New York, Vladimir V. from Pennsylvania. I don't want to butcher this. Devendra R. from New Jersey. Ooh, I think I actually got that one right. Don W. from Florida. Kirk L. from Florida. Listen, all of those names that I just read off, all of those are encompassed inside of our riskless trade. So those are all under the first 30 under the riskless trade. There's probably a few more slots open over here. I think I read off about 20 or so names. Again, a couple of questions that are also popping in over here, and I apologize. I'm trying to read, talk, walk, and chew gum all at the same time. All right, the next one. Does trading intraday in an IRA subject you to day trading rules if the account is under $25,000? And that's from Dennis. The answer is yes, it does. So here's the key. You have to know what products fall under the jurisdiction, okay, of pattern day trader rules and what products do not. And that's actually something that we help you decipher here at TheoTrade. And it's pretty straightforward, but there's a lot of products these days. When I say products, there's stocks, there's options, there's futures contracts. There's a lot of things that are not considered that fall under the day trading margin restrictions. That was one of my jobs, obviously, at TD Ameritrade, is to know the different products out there. All right, so we'll walk you through that, Dennis. All right. By the way, are all trades from a portfolio texted? Yes, if they're in a portfolio, they are texted. There are times that I will do intraday trades. That's people that want to trade throughout the course of the day. Those trades may not be texted because they're fast, right? You're in, you're out. You don't have time to text. You're in, you're out, you're on with your life. Okay, the next question. What delta do you buy or sell these at? Also, the probability of touch. That's from Kenny. Kenny, there are a lot of things that I'll answer tonight. That's not one of them. Because that's exactly what the criteria is. Yeah, actually, you know what, Kenny, you'll appreciate this. So what delta do you actually use? The delta that you use on the trades that we talked about in here. Okay, so the delta that you use, and if you don't mind, I'm going to actually pull up the this page again because there's people asking me to pull up this page again, so I absolutely will. Again, it's TheoTrade.com/day as I answer a couple of these questions here. And again, I know a lot of people are firing questions in. I'm doing as best I can. I'll stay with you till we answer some of them. So, Kenny, it's a sliding scale. And I'll just give you an example. If there's X number of days to expiration, you might use like a 75 delta. The closer you come to the expiration, the delta is going to slip down a scale. And that's actually exactly the way that we teach it inside of the course. So the delta is not static. The delta changes depending upon the number of days related to expiration. That's how in depth, though, we go here, Kenny. Okay. The next one comes from Bruce. He said, are you basically go with at the money options, Bruce? Absolutely, unequivocally, no. We do not just go with at the money options. Again, it is a delta sliding scale, and it's really easy to find. By the way, what are the somebody asked, what are the rules for day trading? Ooh, what are the rules for day trading? Well, if you have under $25,000, they don't let you do much. You can't trade in and out more than 3 times in a given week. It doesn't even matter. People like, I traded the spiders, then I traded the QQQ. Okay. The pattern day trader rule is horrific. And that's why we help you circumnavigate it. Oh, somebody said, what's the preferable time to place orders? Vladimir, that actually depends very much on you. So I don't mind saying, like, listen, if you're like a morning person, an afternoon person, I myself, I broadcast the first hour every day. So if there's a time that I like to trade, I like to fire off orders early in the day, especially intraday trades. And you'll actually see some logic used during the class to present to you that putting a trade on early in the morning and leaving it on until almost the close of the day, okay, provides in many cases the highest percentage reward. All right, with that, I think I got most of them. Okay, I think we got most of them. Trying to read back in a couple more questions. All right, so from there, I think I also got most of the names. Again, it takes about 4 or 5 minutes before we actually see some of the remainder of the names. So bear with me here momentarily. Again, couple more that are actually firing here. Marie J from Illinois, Jeff M from Ohio. Again, I apologize. It's about 4 to 5 minutes delayed by the time I actually see your name pop through this screen over here. Listen, I have gone way over tonight, and I really appreciate everybody actually tuning in this evening and staying with me. Again, I'm not supposed to go for 2 hours, but we're into this stuff, especially now, especially in such a volatile marketplace. Please join us first thing tomorrow morning. We only have, at this point, what I can see right now, there are 4 spots left. There are 4 spots left in the riskless deal to fit under the cap there of 30. It's TheoTrade.com/day. Join us first thing tomorrow morning. I'll be live at literally 6:22 Pacific time. That's 9:22 Eastern Standard Time. Have a wonderful night, everybody. Bye-bye.